Good afternoon. I'm Sherry. I'm your host for today's Trader exclusive webinar. We are talking with some 4 great presenters about which trading strategies are working right now. Check our website, please, at tradersexclusive.com. We regularly post articles and video clips with valuable trading tips and techniques. That's also where you'll find a recording of today's webinar. I will be sending you email to give you the link. And before we get started, I'd like to share a quick disclaimer. And you all already know this, but we say it every time because that's what the government wants. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. And I'd like to ask everybody, please take notes and write your questions down, but hold them for when the presenter is done and has the Q&A session. And you might want to add a little context to your questions so that we can make sure that it makes sense. And I'm going to unmute you now, Simon. Such power I have. Simon Klein of Tradesmart is going to be giving us a talk called Live Market Analysis Using Supply and Demand. Simon is the CEO and founder of Tradesmart, which is tradesmartforex.com, which it has quickly established itself as a leader in trading education, training, and coaching services, as well as being a provider of market analysis services to professional traders. Simon's a professional trader and trading coach with over 15 years of experience. He has a passion for trading and loves to train and coach others, whether you're a complete beginner or an experienced trader. And Simon has taught and coached traders who work at the top Wall Street firms and other professionals from all over the world, including doctors, accountants, judges, lawyers, pilots, managers, and business owners. And I want to thank you, Simon, for joining us because I know it's late where you are.
Yeah, thanks, Sherry. It's great to be here.
Appreciate that. So here we go. I'm going to give you the screen. Take it away.
Okay, so let me know, everyone, that you can see my screen. Everyone, you can see the screen, Sherry?
Yes, the screen is up.
Okay, excellent. So great to be here, and thank you everyone who's here live, and for those watching the replay, I hope you enjoy it and gain something valuable from this. Again, this is a very powerful and life-changing or game-changing presentation, and it will help you look at the market in a completely different way, one that actually works for most people once you understand how the market works. Okay, so let's begin. And this is how I'm beginning most of these presentations nowadays. That's a picture of my wife on the left and my brother-in-law. I want to say a quick thank you to all the health workers who are working tirelessly through this pandemic. So a huge thank you, and especially thank you to my wife as well for supporting me and giving me a lot of love and support throughout my development as a trader. And the beginning days were tough, like most beginning traders. And she stuck with me throughout and supported me throughout, even when I came back from the trading floor, having rather large losing days. She smiled and said, "That's good. It was a good day, even though I thought it wasn't, because that's the way you learn." And so thank you again to all the health workers.
Hey, we're seeing your event details starting shortly screen.
Okay, so let me start. We had that issue before. Let me start again. Are you seeing my screen?
There we go. Thank you. I see a thank you.
Okay, so let's start again. So that's thanking my wife on the left and my brother-in-law on the right, and all other health workers who work tirelessly. She works every single day almost through this whole pandemic. And so thank you to them. And I was thanking her for the support she's given me throughout my trading career. Okay, so tell me you can see the screen changing now. That's a picture of me giving this exact presentation, not exact because it's a different market, but basically the concept I'm going to cover with you as well. Every time I do this, it's slightly different because we're looking at the live market. And again, quick disclaimer, just bear in mind all comments I make here for educational purposes only. You all know there's a high degree of risk involved in all types of trading, and we're not responsible for your trading and investment results. Again, there's a little bit about me for those of you who are here for the first time. And just to let you know that Tradesmart is a trading education business, and we focus primarily on teaching you how to read the market professionally and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. This is what we're going to cover. Why am I always wrong? It feels like that for most beginning traders. We're going to cover professional chart reading, what you won't find in a book. Then we're going to go into supply and demand, and then we're going to use what I just taught you to jump into the live markets, and you're going to start to see the markets a bit differently to maybe you've been looking at the moment. I'm going to show you two trades as well that we did in a live trading room, one yesterday and one we did today. And we will go into the live market and we'll look primarily at the Forex majors. We'll look at gold, oil, and maybe we'll jump into some stocks as well and look at Bitcoin and some commodities, probably through the futures. And then I'll open up to audience questions and answers and share with you how you can take the next step. So the problem is this: why am I always wrong? So the market looks something like this, and you're taught maybe of, uptrend, maybe price is moving above a moving average, and you're like, okay, great, I'll buy. So I take my first buy as a trader, and price starts to go in my direction, and then it turns and starts to go to the downside. And you're thinking, oh dear, oh dear, oh dear, I don't have a stop. What's a stop? I'm losing too much money, it should win. Oh no, and you take your first loss, you're down $500. Immediately what happens is you double up your position and you think, I got it the wrong direction, it's going down, I'm gonna make that money back, and you go short. And the market goes down and you make a little bit back, and all of a sudden it turns to the upside and you take your second losing trade. And then you jump in again on the buy side thinking, great, I'm gonna make my money back. Now you're down about $1,500 and you go big on this one. You're risking a bit more. You put bigger size on, hoping to make that money back, and you need some extra income for your retirement, or you just lost your job and you really need to make some money, and you're putting it all out. And all of a sudden it goes down, 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 and you take your third losing trade. You're down about $5,000 now, and it doesn't feel very good. And this is your first day of trading. So you take a step back and you think, okay, I'm doing this all wrong. It seems to be I'm buying up here and selling down here. I should be doing the opposite. I should be selling up here and buying down here. So you think, okay, I figured this out. The market's going up now. I'm not going to buy here, I'm going to sell. So you take your fourth trade, sell side, and the market this time decides it's going to the upside, and you take your fourth losing trade. You throw your hands in the air, you're feeling completely defeated by the market, and obviously it's the market's fault. And you're like, oh dear, what just happened? I'm down $10,000. That's my trading account done. What am I going to tell my spouse? This is bad. So it's like back to the drawing board. It seems to be, I mean, just type, I can't see the chat area. I think Sherry can, so maybe she can tell me if people are typing. But if that is you, then just say, yeah. If that's you, just type a yes in the chat area. I want to see how many people if that happened to them. And that's what your trading experience is primarily at the beginning. That's what it was for me. I was the counter indicator on the trading floor when I first started trading at New York Stock Exchange. I used to call out a trade, and there were two traders on the floor who I used to walk past them. They were up $2,000 to $10,000 within the first 5 to 10 minutes of trading every single day. So I used to call out a trade long, and they used to go short. They didn't even look at what I was trading because I was a counter indicator. So as a novice trader or beginning trader, when you don't know what you're doing, you're usually on the wrong side of the market most of the time. So what you need to learn about is something called supply and demand. Remember, these are not joining peaks and troughs. These are zones, these are areas. And sometimes the area, you have to understand when price is going to turn in a supply zone or when it's going to break a supply zone. So let's go back to basics. Chart reading, professional chart reading. You only need to learn 3 things. on a backdrop of multiple time frame analysis. The three things you need to learn are pivot analysis, which is how to read the trend. And that's not trader floor pivots. This is pivots on the charts, okay, using candlesticks. Pivot analysis to identify the trend. And I'm going to share with you how you can get access to a training that will teach you that, and you won't find it anywhere else. Then the second thing you need to learn is supply and demand analysis. You need to know where trends are going to begin and end. That's usually in areas of supply and demand. Like this could be supply, this is demand, price came down to demand and bounce. You need to know where those levels are. It's like mapping the market, so you know where price is going to move from and to. You also need to know something called price direction analysis. Again, you won't find this in any book, you won't find it anywhere. And this will teach you what direction price is moving in. For example, you can be in an uptrend, but price is currently moving down. Wouldn't it be good to identify when price changes from down to up, when price direction? So you're in an uptrend moving up, but price is currently going down. If you can identify a direction change where it moves from down to up, wouldn't that be a good place to get in when the price starts going in your direction, in the direction of the trend? And you need to be able to do this on multiple time frames. For example, you can be in a downtrend on the hourly chart, but in an uptrend on the daily chart. And usually the downtrend on the hourly chart will end where the uptrend picks up on the daily chart. So if you can identify that, then you can identify where the trend on the daily chart is going to continue moving to the upside. So this is my saying over here. The charts will teach you all you need to know once you have a framework for reading them. Once you have that framework, you can understand every market. You don't need any guru, you don't need any further information, you just need to know how to put this into action for yourself so that you start to analyze the market for yourself. Remember, it's like learning to drive. You can learn to drive a car, but until you learn how to drive the car in different road conditions, in different environments, you don't drive the car the same in a highly in an area that's full of pedestrians than you do on the Autobahn in Germany, for example. Or you don't drive the same in sunny conditions as you do in snowy, icy conditions. You need to adjust the way you drive accordingly. The driving of the car pretty much is the same, but you need to adjust and identify different conditions on the road, just like you would different conditions in the market, and then apply your strategies, which is a way of managing risk and trading, taking advantage of the opportunities of the odds in the market. Okay, so let's go back to basics. This is a hammer and this is a shooting star. Now let me ask everyone in the audience, is this bar over here on the left and the one on the right, just type in the chat area, bullish or bearish? Both of them, just type one comma the other and let's see how many people get this right. Again, is this bar bullish or bearish? Now let's take this a step further. When I'm doing that, take a look at this chart. This is a dollar Swiss and it's on an hourly chart. We have 1, 2, 3, 4, 5 bars to the upside, and then you get a bar like this, shooting star. Most people think this is bearish. Yeah, because it had to move up in price, and then we got a big bearish bar, and therefore price should go down. So let's see what happens next. Price continues to move higher. So the question is this bar bullish or bearish? It's actually bullish. And you're thinking to yourself, well, how come? Well, if you have a framework for understanding the market, then you'll understand why. Look what happens next. Most people, when they see that, think the market's going down. We took this trade in our trading room a couple of years ago on the buy side and played it all the way up here because we understood how to read the market. So let's go through the three things we just discussed without going into the details and decide whether we should be buying or selling after this bar. So price is going up and I see this. Now, the three things. In terms of supply and demand, what happened here? We just cleared above a supply zone. So we are no longer in supply and we've got room to move to the next zone, which actually pushed price down, and then we went to the next zone above. So in terms of trend, we're bullish. Put in a higher low down here and higher high. We're moving to the upside. Okay, so in terms of trend, we're bullish. In terms of supply and demand, we're bullish. And in terms of price direction, we're pointing to the upside. So there's three reasons why you want to be on the buy side, not on the sell side, and the market confirms. So if you have a framework to read the market, you can understand without, you can understand every scenario in the market. In our training and in the trading room, we go through, every single scenario market can be in and what the odds are. Wouldn't that be good to know? To know every scenario that could possibly happen in the market and what you should be doing in that scenario and what the odds are, whether you should be on the buy side or sell side or sitting on your hands. So let's take this through now to supply and demand, teach you a bit about supply and demand. So what is supply and demand? Everyone knows prices move higher where there's more demand than supply. That means there's more willing buyers at a certain price level than willing sellers. It can never be that there's more buying going on than selling, because remember, every transaction is a buy and a sell. If you're buying, someone must have sold to you. There's an equal number of buyers of buying and selling, of buyers, actual buyers and sellers. When we talk about supply and demand, we're talking about buyers that never got their orders filled at the price that they wanted, and they still want to buy, and there's no more supply left at that price. So what they have to do is pay a higher price until the equation changes, where there's more supply at a certain price level than buyers are willing to pay. And therefore, if buyers are not willing to pay those prices, the sellers will have to drop their prices down. That's called supply. More willing sellers at a certain price level than willing buyers, prices will drop. So when prices go lower, when there's more supply than demand, and prices move sideways where there's an equilibrium between supply and demand. So let me ask you a question. What moves the market? Is it the news that moves the market? So let me ask you this question. ABC Pharmaceuticals, which is trading on the New York Stock Exchange, I'm just making this up, comes up with a cure for COVID-19. One pill you take, if you get it, you take the pill and you're cured within 1 hour. What's going to happen to the price of ABC Pharmaceuticals? It's Sunday afternoon. Guess what? Absolutely nothing, because the market's closed. So did the news move the market? Not yet. Come Monday morning, the stock gaps up $100 and then sells off the rest of the day, maybe. So if you put an order in to buy at the open, you get filled at the high, because remember, the market makers or the New York Stock Exchange specialists, they are the buyer and seller of last resort. So if there's no one on the buy side, they have to be on the buy side. No one on the sell side, they're market makers. That's what they're called, market makers. So if everyone's buying, there needs to be someone on the sell side to take the other side of the trade. So the market maker will gap up the stock to the price where there's enough supply to take the other side of that order. And if there isn't any, then he or she will have to take the other side of that order. And they're going to do it so that they can make profit. So if they're the ones that are getting in on the sell side, unless they have inventory already and they're selling at a profit. But if they haven't, then they're going to have to go short at a higher price where they're going to be profitable. So you don't see market makers going out of business on a day-to-day basis or a New York specialist. They're in business for the long haul. They're the ultimate day trader. So what moves markets? It's actually supply demand, people that are acting on the news. So do you need to know what the news is? You don't. You just need to be able to understand how the market's moving. Does it matter what's causing that move? Why it's happening? I was always told by one of my trading mentors, asking a question why when you're in a trade is a very dangerous question. You should not be in the trade if you're asking why. Good news came out. I buy the stock and it goes down and down and down. Why? I buy more. I buy more. Someone who used to work in the fund that I used to trade in had $1 million account, and he did well for many years. But there was one stock he kept on buying, and it kept working for him to keep buying as the stock was dropping, because eventually it would turn around, wouldn't it? He did it one time, and that's how he made his money over the years. But one time it knocked him out of the game. That stock was Lehman Brothers. It went down to zero. He lost over $1 million on that trade and knocked him out of trading. So you have to learn how to trade the correct way without any cracks in your foundations. Otherwise, one day it may come and haunt you. So you need to make sure that you're trading with sound, solid foundations. And guess what? If you base your trading on supply and demand, that will never trade. That will never change, okay? Because it's timeless. So your job is to identify supply and demand on the chart. When I first started trading, as I said before, I was trading a New York Stock Exchange specialist system. We were taught to identify what the specialist was doing on the New York Stock Exchange by watching the time and sales and the prints going off on the time and sales. That's whenever there's an order, it tells you the time and the number of shares and the price. Time, number of shares, and price. It doesn't tell you whether it was a buy and sell, remember, because every transaction is a buy and a sell. It's an agreement between buyer and seller on a price at a certain time and a certain number of shares. We were taught to identify whether the specialist was buying or selling by watching the way the prints go off and watching the level 2 or the open book of the New York Stock Exchange specialist. But when the system went hybrid, as in part computer, part human, the system that I was taught to trade at the beginning no longer worked. That's why it was back to the drawing boards. So wouldn't it be a good idea to learn a timeless system that stood the test of time based on solid foundations, and it will never change? And once you master it and have a framework to read any market, you can now understand the market. And once you understand what's happening in the market and why price is moving the way it is, and when price is likely to change, or when trend is likely to change, and you can identify that, you understand what's happening, you can read the market. So what is supply and demand? So if you take a look at the chart, you usually see that price is moving down and then it moves to the upside. You have a push to the upside. So this marks out an area of what we call demand. Where prices drop, there must have been more supply than demand. And we need to identify it's a zone. It's not one price. It's not joining peaks and troughs. It's none of that. Supply and demand is not support and resistance. Support and resistance is abstract. Supply and demand is real. It's based on real orders in the market, unfilled orders. So your job as a trader is to identify high probability turning points in the market, because that's where trends will begin and end, and that's where the market will turn. I'm going to show you the markets, which is absolutely perfect today, because you will see the markets turned today. Actually, yesterday it started. So what I'm going to do now is reveal to you, we're going to jump into the live markets, and I'm going to show you what we've just talked about, areas of supply and demand and prices moving between. I'll share with you the trades also I took today and yesterday in the trading room. There's one caveat here. Obviously, it's recommended that you go through our trading program, but you can come, I'm going to share with you how you can come and join our trading room for a whole month and see us in action every single day and learn about how to read the trend and then see us put it into practice every single day and then understand it for yourself. So let's jump into the live market. I'm going to put up my charts and we're going to start with the pound. Okay, let's start on a monthly chart here. Now you can see we actually called the pound long down here, and one of the traders in my room, Kevin, I'm going to show you this actually. This is a downtrend, by the way, on the daily chart. The downtrend ends over here, but there's a high probability entry down here on an intraday time frame on the 1 hour chart. Kevin took this trade over here and turned a $200 account by adding to the trade as it was going. He held it all the way up to, I think, this 1.3 area, all the way up here. And he added to the trade on the smaller time frames on pullbacks and turned a $200 account into $6,000. Now you're thinking, wow, isn't that amazing? It's doable. Not everyone can do it, but you have to learn how to do it. So he was learning how to add to a winning trade. Losing traders add to losing trades. They increase their size on a losing trade. Winning traders, professional traders, add to winning trades. So let's have a look and see what happened yesterday and today. And this is a trade that actually started yesterday. So you need to understand that this is supply. Price stopped here and then dropped. You see, we came back here, over here, and we dropped all the way down. And price has just come back to this level on the weekly chart. Okay. Now, on the 4 hour chart, price just hit this level yesterday. And we said this may be a good area to short from. Okay, so what happened? This was from yesterday. Let's go down time frames a bit. price came down yesterday. So I was interested in this trade in our trading room today over here. This is 8 a.m. Eastern time when we trade. We start trading. And I see that this is supply above me now, and I've got demand down here. So I'm taking a trade from here to here. Now, let me show you that trade. This is today's trade, and this is the entry that we took in the trading room. I actually took a picture of it as I took the trade. This was my entry, this was my target, and this was my stop. This is what happened next. Price got to the target. I actually got in, it was a nice trade, like 45 pips to the downside. Entry, you see it went up against me first. It never hit my stop. It looked like it was going to go up. Stop was above here, and then the market came down. You can see the market came down. Okay, based on supply and demand and trend and price direction, put it all together, it gives you a trade, just like I showed you in the original example. Now, let me show you. So you can see price moves from supply to demand. This is demand. Why is this demand? Let's go and look on an hourly chart. This is because price jumped up from here. So this is what happened when price came down here again. It went all the way back up again. Now, let me show you yesterday's. Let's go to the Australian dollar. Very similar. Australian dollar it also hit a weekly and a monthly supply area over here. Now, why is this supply? Because price dropped from here. We said in our trading room, and you have to learn the nuances of it, that this is not a sell area, much the same as selling the market highs is not a good idea when the market retraced back, and we'll look at that in a second. So this was the second trade, or the trade that we did yesterday in the trading room. So here I am, it looks like I'm in demand. I'm playing for this to break the demand and go down to this level. Notice, the entry was here, stop was above the area, it was a bit higher than what you see here, and I'm looking for the move down. Now, this is what happened. There's the entry, there's the target. Again, look at the entry, looking for a move down here to the demand area. Here's the target, entry, target. And if you look at the market now, it's continuing from here. This was the target. We went down a bit more, and now we're bouncing around this area. This is demand. Okay, this is supply. Okay, let's go through a few markets. Now, let's look at the E-minis. E-minis, very strong market. It's still going up, okay? And we predicted or projected that this will get up to, if you look at this now, it's probably going higher, yeah? Because it tried to go down here and carried on. This is demand. Every level of demand that we hit on the way down, this was demand. Why? Because prices pushed here to new highs. This is demand. Look what stop price here? Because we pushed to new highs, we came down here. These levels are drawn, if you can see, ahead of time. If price drops down here, this is demand. And we called, by the way, the top and the bottom of the market. I'll show you the bottom of the market. This is the move down to demand. This is demand. This is not, funny enough, a supply area you want to sell. We said, do not sell the highs. It's going to break it. It's understanding how and when this is likely to happen. Now, watch this. How do you pick the market bottom? Okay, I always tell you, you can't catch a falling knife. Let's go back and do it step by step. We actually got this move to the downside as well. Now, the market hits demand here. If you understand how to read trend, then the trend breaks on this candlestick here. I'm not going to go into the details now. There's a training that will teach you that. This is the end of the downtrend. From here, we're thinking buy and we're thinking to the highs. Let's see what happens in the market. Everyone knows. The market went up, and now we're looking for levels to buy against. This is demand. What happens when price comes down? We can add to our trade. Keep playing on the long side. This is demand. Notice we pushed to new highs. And the market plays up. When it comes back down to demand, you buy again. It's a bullish market. And we said we're going to break the highs. Here's another demand level. Price came down all the way up. And when we get to the highs, you're not selling. Notice it looks like a sell here. Get that candle. I said, don't, to our trading room, do not sell. It's going to break the highs. Look what happens. That's the move. Okay, so you need to understand how to read the market. So you understand when you're looking at a market, what's happening and what side of the trade you want to be on. You want to be on the buy side or sell side. There's no point buying if the market's going down. It's going to be short-lived unless you're scalping. And you can also see, which is incredible, this is the biggest move up. If you look at the NASDAQ here, this is demand that just formed here into this area, funny enough. And this is the biggest up move in the history of any market, any stock market. It's the biggest up move we've ever had in the history of the market. We squish this down, and you look at the 2008 drop crash, this 2008 crash, it looks nothing compared to this. And this is the biggest rally compared to this. Usually takes, 10 to 20 years to do this move. And we've just, this is the biggest down move in the history of the market and the biggest up move. We're seeing this is history in the making in 2020. Best opportunities ever for a trader. Let's go to Bitcoin. Bitcoin again, if you understand, let's just make this big on the monthly chart, that this is demand because price took off from here. So what happens when price comes down to this level? It's a buy. Look what happens. You buy around this $4,000 mark, you're in a nice trade here. It's up 300% here, around $12,000. Now, let's also go to oil, another move that we called out in our trading room. Now, the market was tanking. We actually picked this move to the downside on the break, and we also picked the move on the upside as well. And let me show you that. And our target, right, this is a big drop down. This is a move up. If you understand trend, this is the end of the move down. This is our entry on the buy side, long-term trade from here until $40. Look what happened when it hit $40. The market's going choppy sideways. Not too interesting. This is the move you want to get. So if you have to understand how to catch a falling knife, this is catching a falling knife when the trend changes, when price direction changes, when it can't go down anymore because the market's telling me now it's going up. And does it? Yes, it does, most of the time. Okay, we're not guessing the market. It's a bit like putting a seed in the ground. If you put the right seed in the ground and water it, if it's an apple, a seed for an apple tree, it will grow into an apple tree. We're just seeing what's going to happen, most likely going to happen under those conditions before anyone else sees it, because we know how to read the market. Our edge and your edge, if you learn how to do this, will be learning to read the market and then knowing what you should be doing in every single market condition or when you shouldn't be doing anything. So what I want to do, and I want to try and share with you how you can actually take the next step. But let me just share with you, just go back again and show you a few other things. We go back to the pound. That's the, okay. Now, this is a candlestick that we said before. This is a bearish candlestick, okay? You have to understand when this candlestick is bullish and bearish, or bearish. This, on the other hand, is a bullish candlestick. You see, it looks almost the same as that. It's actually red, this one, so it's even looks more bearish, but look what happens afterwards. And again, it's the same concept as we talked about before. And once you understand it, I have a training that I'm working on at the moment, is basically bullish patterns that are really bearish and bearish patterns that are really bullish, and understanding when they are not what they look like they are. How do I know that? Because I spent many years failing at it and went to figure out, why does this trade not work? Why does that trade? Why when I see this and I'm selling, why didn't it work? So with that framework I share with you at the beginning, I understand why the market's making every move it does within that framework. So I understand the market now. Remember, there's 3 things that you need to learn. And if you understand those 3 things, it's solid. And if you put them together, you have a 3-pronged approach to understanding price action without any indicators you do not need. I have an indicator here, I barely use it. And many times it gives false signals, okay? If you understand where demand is, you understand from the short trade today where to get in, where to get out. You don't stay in this trade anymore because it's a very bullish market overall, and most likely we're going higher. Okay, so let me share with you a trader success story. So this is Jane, and Jane started with me at the beginning of 2018, and she went from beginner, didn't know anything, to consistent profits in 3 months. And this is what she wrote. All I can say to anyone who wants to consistently profit, just do it. That training turned my whole trading around. From that day on, my trading has been so consistent, it's really mind-blowing. Once you understand the levels and can read the trend, you will beat the market every single day. However, the key is follow the pivot analysis, use the demand and supply levels, and adopt it to your own trading style. Be very disciplined, don't be greedy, stop when you've made your daily profit, and you will turn losing trades into winning consistently day in, day out. Simon's trading can be adapted to any market. I mainly trade the NQ, NASDAQ futures, and CL oil futures. I use my own strategy based on Simon's education. I found the best thing was knowing what you are doing gives you confidence in your trades, and the fear of losing was gone. Trading had become a lifestyle, no longer a binary gamble or nervous hope job. Believe me, it's the best and only training to succeed with. This training completely turned her life around. So this is the next step that I'd like to share with you. Now you've seen a simple and powerful approach to reading the market. Why don't you take it a step further and learn how to read the trend using pivot analysis? And these are the benefits of reading the trend. You want to trade in the direction of the trend. The trend is your friend, but most people miss the last part of it until the bend in the end. The bend in the end is where the trend meets supply and demand. You need to know where that is. So you don't want to fight the trend until it gets to the end, until you get to that level. So you need to know how to identify those levels. You have to know exactly when a trend begins and, more importantly, when it ends. And make sure that you're never fighting the trend. Most of the trades I make sure on the time frame I'm entering on that I'm not fighting the trend. I'll wait for it to break. If I'm in a downtrend and I want to buy, I'll wait for the downtrend to break. It gives me more confirmation. And make sure, this is an important one, that you're on the right side of the market. Once you can read the market, even if you get the entry slightly off, if you're on the right side, you'll get carried in that direction. You don't want to fight the strong waves, you want to go with them. And you'll be able to develop, guess what? A profitable trading strategy that you'll be able to test and prove has a positive expectancy and will make money over time. Or you'll be able to enhance an existing trading strategy. So I'd like to offer you to join my How to Read the Trend training session and trading room. And this is what you're going to learn. Again, how to identify the current trend of the market, to analyze a trend in multiple time frames, exactly when a trend begins and ends, and how this knowledge will dramatically affect your bottom line. And you'll also be able to watch us analyze and trade the live markets in real time. Like I showed you those 2 trades. There's trades that we took live and explained in the live trading room and actually walked through as the market was playing out. So here's what people are saying as well. I wanted to say, I think what you teach in How to Read the Trend course is brilliant. Before that, I picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. You're a mastermind. The trading room is very helpful in understanding how to go through the process. I've been trading for 11 years and I've not seen anything like what you do. Love how simple it is. I mainly trade options and with trades that last 30 to 60 days. I've been looking for something I could use to day trade for 2 years now. I want to round out what I'm doing with another source of profits. I've not been able to find anything I could execute consistently. I'm just paper trading with your system. I've been doing it for a couple of weeks now and I've had far better results than anything I've ever tried. Assuming this continues, I will take it live sometime in late March. He is now live. So again, this is what you're going to get in the training. So for 1.5 hours of training, $397. It's on demand. You can watch it as many times as you want. You get personal access to me. You can ask any follow-up questions and you can ask them in the live trading room. You can ask other traders as well. We have a whole trading community. You get 1 month access to the live trading room. It's $497 a month. You get the first month for free and you can cancel obviously at any time. So here's the offer. You join now. The regular price is $894. The deadline's Monday, September the 7th. No pressure. At midnight Eastern time. If this is for you, then you're going to get $497 off. It's $397 and maybe if you will, Sherry, maybe put the link into the chat area so everyone can see it. And I'll show you very quickly how to, and again, very, very special bonus for everyone on this presentation. Only the people that are here live, okay? And so only, I have a limited amount of time. Yeah, do you want to put the, so people can click on the link? I want everyone to click on the link that Sherry's putting in there. And
I added it in there. Everyone should be able to see it right now. And I also shared questions with you from everyone.
Okay, so I'll go through those very shortly. So basically, special bonus, the first 5 people that sign up before the end of this presentation will get a one-on-one coaching session from me. I work for usually for $500 an hour. That's what people pay me for coaching, and they get results. Okay, and that's why they do it. If you don't get results, it's a waste of time. Okay, so I help people go from not being successful to becoming consistently profitable traders. Okay, so you'll get one of those sessions if you sign up during. It's only available for the first 5 people that sign up on this presentation. So there's the link as well for those of you who are watching the replay, or for those of you here live. It's tradesmartforex.com with the number 4/traders exclusive. So go into that link now, and I'll share with you exactly what you get. So very quickly, so you come into this over here, this page over here, you click buy now, it brings you to the checkout. You fill out all your details over here. It's a monthly subscription. After the first month, you can cancel at any time. So put yourself in a reminder. If you don't want to carry on after the first month, just cancel it. You can cancel it immediately if you want as well, no problem. And what you do is you'll get immediate access to the members area over here. Everything to do with how to read the trend, and all the other training is in here. Everything to do with the trading room, both the live trading room and the recordings is in here. And this is something else. So this is how to read the market professionally, session 1, which is how to read the trend, and everything to do with the trading rooms over here. From the live trading room, you go here, daily recordings. You've got today's session over here. You can go and watch me take that trade live immediately. Just go in, watch the recording, and the weekly preparation session where we set up all our zones and have a game plan for the week. I had a postdoctoral research fellow from Stanford University go through all my videos on I used to put a video out every week on the dollar. Where's the dollar going next? He analyzed it and came out with, if he would have taken trades based on that analysis, he would have been right 85% of the time, and some of them big trades. So he did that in pure Stanford University postdoctoral research style. They're very good at statistics. So he actually went through and sent me his statistics on it. And he's been sometimes so that's from a Stanford University PhD.
Simon.
Yes.
We have about 3 minutes left. You have a few questions there that I wondered if you might be able to cover them, but also let everybody know how to get in touch with you if they have
sure.
questions.
So I'm going to share that. Okay, so if you want to join now, that's the deal. It's $397 plus the first 5 people get a free coaching session as well. Questions I'll open up for now, and you have a YouTube channel. You can get in contact with me. Maybe you can put my email in the chat area. Sherry, it's Simon at, and this is the web, tradesmartforex.com. You can go to my website and put your details in there if you want on the main site. If you want to know more information, just put your details here, and you can. That's not my one, but this one, Simon. That's also my one, but Simon at tradesmartforex.com. Yeah, and you can even get some free information here about how to build a profitable trading strategy in 15 minutes. You can go in here if you want. Okay, so let me answer some questions.
Can you see some questions that I tagged you for?
Okay, where am I looking in the questions area? Let me just pull this out. Okay, let's have a look.
Yeah.
Okay, let's pick. So you've got my email.
Yeah, I just put it up for everybody.
Ask me a question. So Udayan is asking, do you teach pivot analysis with the training? Yes, with this training, how to read the trend, which you're going to get now, I'll teach you pivot analysis. Basically everything about reading the trend, everything you need to know, reading the trend in multiple time frames, how to reconcile, like how do you pick trades like I showed you on the pound, on the big time frame, the one that Kevin took, that we called out in our trading room, how to do that. Yes, you can email me later, Mike. Anyone can email me, feel free to do that. I will try to get back to you as soon as possible. If I trade with indicators, why do I need to learn how to trade without them? If it's working with you using indicators, then go for it. I like looking, most indicators are lagging. We get in before most people, we understand what's going on. I threw away all my indicators over 10 years ago, more than 10 years ago, and focused on reading price. If you can read price, you don't need to, look at price through a different lens. You can look at it directly. So it's very exhilarating, and once you can do that, it's a bit like riding a bike. Well, why ride a bike with stabilizers on if you can ride one without? That's basically the same question. You don't need indicators. So, the whole trading world is full of indicators and smoke screens. And how people in the world of trading are successful with that?
Yeah.
About 10%.
All right.
How many people, so if you want to be successful and if it's working for you, then carry on with indicators. If it's not, then it's time maybe to learn something else.
Fantastic. Thank you so much, Simon. I'm going to have to jump in here now. We're right on time, and everybody's got your email address. Simon@tradesmartforex.com is up there in the chat, and the link to the tradesmartforex.com/traders exclusive gets you guys a really great deal. So thank you so much, Simon. What time is it there? It's late
Okay,
at
thanks,
night
Jerry. We're
now.
8:45 at night.
Okay,
So
well,
thanks,
thank you.
Jerry.
We really appreciate this.
Okay, thank you. And thank you everyone for joining and for watching the replay. If you're watching the replay, hope you enjoyed it. And good luck
Oh,
with your
thank
trading.
you. Have a great day. All right. And our next speaker is waiting in the wings. And we are going to be bringing now Stephen Cawiezell. He is the head publisher and founder of the Tradersplan.com, Traders Plan Publishing Inc. He's going to talk to us about how to time the bottom in stocks. Stephen bought his first stock at the age of 14, and the rest is history. So he's established the Traders Plan as a distinctively unique growth stock newsletter that focuses on trends in the market indices. So let me just see where I am here. Stephen is with us. And Stephen, you are self-muted, so I'm going to make you the presenter. You need to unmute yourself. And there we go. Stephen, can you hear me? Can you talk now?
Mic check. Can you hear me?
I can hear you now, and we can see your screen. It says the Trader's Plan, how to time the bottom in stocks.
Excellent. And I have 45 minutes. Is that correct? I want to make sure I don't go over.
Yes, you do. And I will jump right in. Oh, and what I've been doing is I have been sharing the questions as they are being presented. I've asked everyone to hold their questions, but some of them will lose their context if I don't share them with you right away. So you can choose to answer or hold the questions when it comes to you in the questions box.
Okay, I might choose to hold, and because I can always go back, and I should have plenty of time for Q&A. If I got 45 minutes, I can always choose to go back and refer to the slides for the questions. That should be pretty easy.
Fantastic. Okay, well, take it away, and thank you for being with us.
Oh yeah, absolutely. No, I most certainly appreciate it. As introduced, my name is Stephen Cawiezell with the Tradersplan.com. That is me right there. We are going to talk about a topic that is near and dear to my heart and that I present on quite a bit, is how to time the bottom in stocks. That's the title of the presentation. Now, my big promise to you by the end of this trading is you're going to have a serious advantage over a majority of traders. Right, and I know that for an absolute fact because the 3 rules I'm going to show you combined with 20 minutes a week can make you a successful trader. Now, the reason why I feel so confident in that, this is a complete rules-based approach. No emotions, no discretion. This is a rules-based approach. So if you follow the rules, you will do just fine. And luckily for me, I get to see traders put this trading system into action every single day. So real quick, I've got to make the lawyers happy, so I'm just going to give you a few seconds to read that. Okay, lawyer's happy. Okay, I want to make sure, I want to be respectful of your time, and I want to make sure you're in the right place, right? To kind of set the stage for what I'm going to be talking about. So this training session is for you if you need an actionable plan to pull weekly retirement income from the market, right? From your trading. Or maybe you have been consistently losing money, even in bull markets. Believe it or not, I get emails all the time. People are still losing. Or maybe you want to retire early. You're 50, you're 45, you're really looking to, put the jetpacks on the growth of your portfolio, your nest egg, you're looking to retire early. Or maybe you just cannot afford to lose money from trading anymore. And by what I mean by that is you are ready to follow a process, you're ready to follow a system, you're ready to turn trading into a business and get rid of the hobby. Okay, so a little bit about me. I'm just going to add to what Sherry said. Now, I am a former financial advisor turned trader publisher, and that was back in 2013. I left money management to become full-time trader. Now, when I was a financial advisor, I worked in a practice with 60 million assets under management. I'm the author of Expert Trading Systems. It's a book you can purchase on Amazon, and the head publisher and founder of Tradesmart.com. So that's me. There's a little bit of story about me, just so you know who's on the other end. Now, what makes this easy? What makes this trading system that I'm going to teach you easy? For one, there is zero fundamental analysis involved, just price and volume. So zero fundamental analysis. You don't have to worry about sales, earnings, any of that junk. No fancy indicators, just price, volume, and rules, okay? There are 3 rules that you can literally write on a Post-it note, and I mean that. I'm going to give you 3 rules that you can write on a Post-it note, and you can stick it to your computer screen, and that's going to give you all the rules you need to identify this winning system, and it only takes 20 minutes per week. I don't know about you, but I don't like to be glued to the screen 24/7. I like to trade a little bit every day and then do what I love doing, whether it's going fishing, spending time with my kid, or whatever else is. So this is really designed to a 3-step trading system to pull weekly income from the market with minimal time. Okay. Now this is not for you. Then this is not for everybody. So I want to kind of weed you out a little bit. This is not for you if you cannot follow rules and choose to follow your gut. Okay, so if you're still in that entertainment, you're still in that hobby mode, right, and you just want to continue to go with your gut on what stocks are going to go up, it's going to be very hard for you to follow a set of rules, okay? Or maybe you love the long shot gamble approach more than the ROI. Again, this has to do with, are you ready to turn this into a business and, kind of get out of that hobby mode, right? Or are you just looking for the euphoria of, every now and then you hit that big winner, but that big winner definitely doesn't pay for all your losers, okay? Or maybe you cannot come to terms with the fact that the market knows more than you. I believe the market is always right. I'm not going to argue with the market. If my stop get hits or my target get hit, that is the law of the land, okay? So once per week setup. Now, and I've been trading this trading system for several years now, very successfully. Now, when studying the bottom in stocks, I noticed that there are certain qualities that all stocks have before they turn into winning trades. Now, in order to identify this money-making setup, we must recognize these qualities before they make their big moves. Now, I've narrowed these qualities down into a rules-based system that I'm about to share with you. But real quick, before I share with you the rules, I want to talk about a big picture view and how you can do this with your daily and weekly routine. This is exactly what I do. Every Saturday or Sunday, usually for me a Saturday, I spend 15 minutes going through my scans to find the best setups, right? I'm going to tell you where to do that. Every Monday morning, right before the market opens, 1 minute before the market opens, place my market order, right? Just boom, place the market order. It's just that simple. And then you just set an alarm on your cell phone next week, every week, to make sure you don't forget to place the market order the next week, and then just rinse and repeat, right? It's just rinse and repeat. So 15, maybe 20 minutes when you're starting out on the weekend to find these high quality setups, and then place your market order or order on Monday at the open, and then voila. Now, this system, this pattern is called the weekly reversal pattern, okay? I'm going to focus on this. I'm going to call this the signal bar right here because this is exactly what it is. Now, this is Eversource. This is just a sample. stock. This is one that we did actually trade, but I really like this, and this is a weekly chart, so be crystal clear. This is a weekly pattern, so we're looking at weekly charts. Here's what's interesting. You can look at any chart in your watch list, and I mean absolutely any chart. Go back a couple years, turn it into a weekly chart. You're gonna find this setup pop up again at these major swing low points, these major bottoming points. And even though this was clearly the low, right, the major swing low of the whole chart, both you and I know that they're not all going to go on and double, right? It's not about that, right? Some of them will, and I'm going to show you some of them that will, and some of them will just be nice little income trades. But I like this chart just to show you how powerful this is, just how powerful this is, and how often once you train that eye, you will start to see it over and over and over again, okay? So here are the rules. I'm going to focus on Amazon, and because this pattern is classic textbook, and full disclosure, this is still a live alert. I still own this stock, okay? I still own shares of Amazon because it's still running. I have a money management system that I follow. That's not a buy or sell recommendation, but I want to disclose that, okay? But I like this chart because it shows how many times you'll actually see it on a chart over and over again. But let's use this signal bar right here that I have all these pink arrows around, okay? So let's use this signal bar, right? The weekly reversal signal bar. Here are the rules right here. You need to write these down, take a snapshot, write it down on a post-it note. I told you they're very, very simple. I'm gonna walk through them once, and then I'm gonna walk through them again, and then we're gonna look at several samples so you can start to really train your eyes so you can identify this and do this yourself, okay? So rule number one, all right, looking at this signal bar, right? This is a reversal bar. Rule number one, weekly chart must undercut the prior 3 weeks. What I mean is the low, when you're in a downtrend, then all of a sudden you get a reversal, the low, this 1626.03 right here, must undercut the low of the previous 3 weeks. So 1, 2, 3, check. So it must be the lowest point in 4 weeks. It's just that simple. This signal bar needs to undercut these 3. And I'll talk about the psychology here in a second. I want to walk through the rules first. Rule number 2, must close the weekly signal bar must close above the prior week's close. Well, that's easy because all I have to do is look and see if the bar is green. If the bar is green, I know it closed above the previous week. Doesn't have to close above the previous week's high. Doesn't have to close above the previous 3 weeks high. The bar just has to be green. It just has to close above the previous week's close. Rule number 3, must have above average volume. And I identify above average as I just have these volume bars and I plot a 50-day moving average, right? Very simple. You see that 50-day moving average right there. Very simple. If the volume bar is above that line, it's above average, okay? So I identify it. Now, those are the rules. It literally is just that simple. Now, let me walk them through you one more time, kind of explain the psychology behind this and why this works so well. Right here, you have the weekly chart must undercut the prior 3 weeks. So I want this low to undercut the prior 3 weeks. Now, why do I do that? Well, because I want to run out all the stops. I mean, how many times in a given year, if you trade a lot, especially if you use stops, you know, let's say you have a stop right here, you're going to get picked off. That stock is going to reverse. That's an excellent time for it to reverse and go the other way. It happens all the time. A lot of people that use stops are retail traders. They're the weak holders. They're not the institutions. They're the retail traders like you and myself, okay? So I just want a nice flush out, run all the stops type of rule, okay? To get rid of everybody. Now, rule number 2, must close above the previous week's close. Why do I do that? Because I want there to be enough reversal in the stock for it to be green. Like I need it to close in the top end of the range, or I need to at least close it above the previous week because that is the early signs of a trend reversal, right? I'm looking for enough strength in that reversal because it started down here, it closed up here. Again, we're just trying to narrow it down a little bit so we have a nice signal bar. Rule number 3, must have above average volume. Now this was the bottom in March of this year, okay? But this is also Amazon. You can see this weekly bar right here, 50 million shares, right? And we'll say the average price is 1,700. I don't have a calculator, but that is a lot of money, okay? That is billions of dollars piled into this stock in a single week. Now, this, tens of billions of dollars that moved in, not every stock's gonna be that much, but these are institutional traders, the pensions, the mutual funds, right? These are the guys that are gonna move the market. Now, the average mutual fund, it takes 3 to 6 months for them to complete their position, right? Because a mutual fund can't put $100 million in one stock in the same day because they're just going to run their average costs up. So they slowly accumulate. A lot of times it takes 3 to 6 months. Now, as retail investors, individual investors, you and I, we have the opportunity and the flexibility to get in and out with these and just hop on their coattail and ride it until the trend is over, okay? So really the logic is I want the institutions piling in because that shows me the smart money's moving in, right? This smart money, this kind of volume, these guys are either initiating a position or they're adding to their position. Either way, because of the big bucks, they're not going to turn around and sell it the next week, okay? Most of them will not. They're starting to accumulate, so I just want to ride their coattail, right? It's just really that simple. So rule number 1, undercut the prior 3 weeks to get rid of the weak holders. Rule number 2, must close above the previous week. I want there to be some strength in the weekly bar. Rule number 3, must have above average volume. I'm looking for institutional support, right? I'm looking for the big bucks to pile in this thing so I can jump on the bandwagon, all right? Let's look at some more samples because we're gonna look at about 4 samples. I wanna give you some different looks. But here, look at this one right here. This is a perfect weekly reversal pattern, and you can start to identify. Nice little pullback. The low of this, right? It reversed, right? It undercut the previous 3 weeks, closed above the previous week. The rule number 2, it's green and above average volume. Nice little swing trade. Wasn't a huge one like this one, but it was a nice little income trade. And then you have one that happened right here. Look, you pick another swing low point on the chart, and it's not going to be every swing low, but another swing low point on the chart with above average volume, fulfilled all the rules. This made a nice little move, okay? Nice little move. So you have 1, 2, 3 on this chart that worked very, very nicely. One was a major winner, okay? Still running. I think Amazon this is probably more like up 84, 85% by now. This chart is 2-3 days old, but still, right? Let's look at a different example. Let's look at an example where it was nice, but it wasn't as nice as Amazon. All right, whoops. KB Home, this was a real live alert we took. It fulfilled all the rules. Look at this signal bar right here. This 2308, it was in a kind of a downtrend mode, or I'll call it a pullback mode. It undercut this 2308, undercut the previous 3 weeks, closed above the previous week. The bar is green, rule number 2, and above average volume. And this was classic textbook kind of volume. Look at this. You got a skyscraper accumulation and then no distribution. Then you got skyscraper accumulation. We entered at the open on Monday, sold half in a strength, sold the remaining when the trend is over. And I'm going to talk about these rules here in a second. But I really just want you to focus on this bar right here so your eye can start to really train and identify it, okay? So did we get in at the exact bottom? Absolutely not. Did we get out at the exact top? Absolutely not. But we made most of the move and most of the trend. We caught almost all of it, and we completely avoided this 80% slaughterhouse, okay? So again, we have our rules in place to enter and we have our rules in place to exit, okay? This was a nice little trade. Now, I like this example, even though it wasn't a huge winner, because it doesn't look like the classic weekly reversal pattern, but it is because it fulfills all the rules. This was a trade we took earlier this year. This is the signal bar right here. And even though it doesn't look like it, this undercut this whole consolidation. This was under this, right? The low only needs to undercut it by a penny, right? Just by a penny. So it doesn't need to have some big long candle wick where it's way below everything else, just a little bit. So it undercut it by like 2 or 3 cents, picked off that stop. That's exactly what I'm looking for. Rule number 2, the bar is green. Rule number 3, above average volume. We entered at the open on Monday and we had our stop down here, and we came literally within a few pennies of getting stopped out, but we had rules, objective. You cannot change the rules, okay? It kept us in, It worked out. We sold half at 8% and the remaining when it broke the 10-week or the 50-day moving average. All right, so we sold half at 8, sold half at 3.2. I think we netted like 5-6% on this trade total, right? Just a nice little weekly income trade, okay? Now here's another example, and this stock, I don't want to call it a sore spot, but this is one. This was a real life example. This is one that we recently got stopped out of for a very, very nice gain, and then it just picked off our stop and then absolutely went up, and that happens, right? Most people say, well, why have a stop in the first place? Well, because it could have gone all the way down here, and I've had stocks that do that. So I never trade without a stop or without a target. I know exactly where I'm getting out at the upside and on the downside, right? Rules-based approach. You got a perfect weekly reversal pattern right here. Swing low, above average volume, the bar is green, fulfills all the rules. Now on this one, I actually didn't even see this pattern until a couple weeks late. So it was trading tight right here, but it was above a moving average. It was looking bullish. So I went ahead and entered around 60 bucks. So we did the same thing. We sold half at 8% and then we let the rest run. And then we were trailing behind the 50-day moving average or the 10-week if you're looking at a weekly chart, and we got picked off. See how it kind of reversed and got picked off? Looks like a reversal, but if you notice, the bar is not green, so it fulfills rule number 1. It undercut the previous several weeks. Rule number 2, it's red, so it is invalid, even though rule number 3 is an above average volume. So our stop just got picked off, and CrowdStrike was at around 130, 135, and it just went straight back up. So there's no rule that you can't buy it back. Got stopped out for a nice gain right here. We sold at 78% higher than where we got out. We also made 60% on the options too. But again, you start to notice these, and this is just a simple trading system where you can really get some very, very nice entries in stock, and the accumulation is a huge, huge part of it. So this was a very nice trade. Okay, so that is all the samples. So I just kind of we looked at Amazon, right? We saw this one, we saw this, we saw this, right? Then we looked at KBH Home. This was a nice signal bar, and then we caught meat of the move. Then we had one that didn't look as classic textbook, but it fulfilled all the rules, and we made a little money on it. And then we had CrowdStrike, which was clearly a classic example, and we made quite a bit of money on CrowdStrike. No, we don't own CrowdStrike anymore or any of these other stocks other than Amazon, because Amazon's still running, okay? So here are the money management rules, and these I have traded a lot of different X algorithms. This is just as important as the rules of the overall trading system. So you're gonna wanna write notes, you wanna turn everything off. If you haven't been paying attention, I write this down, right? So here are the rules. Since this is an end of week pattern, you cannot buy on Friday. You cannot front run the signal, right? You have to wait till Monday. You have to wait till the weekly bar closes, okay? So here are the money management rules. Enter at the open on Monday, okay? Sell half at 8%. That sounds simple enough. So we're gonna book partial profits at target 1. Once target 1 gets hit, I'm gonna raise my stop to break even on the remaining shares. Because after that, now I'm riding with house money. Now, why do I do that? Well, if I sell half at 8% and then the stock just absolutely rolls back over, well, and I get stopped out on the second half at 0, where I'm still netting 4% on the trade. That's a nice little income trade, okay? So I'm booking partial profits. I'm raising my stop to break even. I'm giving the stock a little bit more room to run. And if it does, it does. If it doesn't, it doesn't. When you enter at the open, the stop loss is going to be a max 10%. So sometimes it might be a little bit less, 8, but never risk more than 10% on a trade. And once we hit our target 1 and raise half or raise the remaining shares to break even, then we're going to trail 1% on the 50-day simple moving average on the remaining shares, just like we did right here. Even though this is a weekly chart, the 10-week and the 50-day are going to be very, very similar. So we just, these are growth stocks that I'm selecting, strong patterns. So a lot of times growth stocks, they will ride that 10-week and that 50-day moving average. So I'm just going to raise my stop once a week behind this level, okay? If the stock continues to run, which we've had some pretty big winners like Amazon so far. So can you do this? Can you spend 15 minutes per week to find these setups, right? How about place a market order before Monday at 9:30? I'm positive you can do that. Or how about set up a bracket order? Now I want to talk about these two, right? Because I told you, I'd tell you kind of my favorite honey hole to find these. The best honey hole I can find these, the best scan is just an earnings gap up scan. Doesn't matter what brokerage you use. Most of them have predetermined, scans that you can look at. So I'll look at above average volume scans. I'll look at earnings gap up scans, and I'll just spend 15 minutes, put the chart on weekly, and I'll just comb through them 1 second at a time. And I can go through quite a few charts in 10 to 15 minutes. I find my top 2 or 3 candidates, and then I make a decision for Monday, okay? In light of automation, and this is called a bracket order. This is a screenshot from Street Smart Edge. Different brokers are different, so you might have to cause them. But when I talk about automation, I'm talking about taking the emotions out of trading. I mean, this is beautiful because you can literally get filled. This is Red Robin Gourmet Burger. This is just a sample, but this was a trade we took. You can literally get filled, and the minute you get filled, you can turn around and say, okay, I'm going to put my stop loss here. I'm going to put my price target here, and I'm going to, press enter. And then you don't have to watch the stock. Whatever the price of Red Robin Gourmet Burger does between your 2 targets, it doesn't matter. You don't have to watch it because you're going to automatically sell on the upside or you're going to automatically sell on the downside, right? So don't focus on it. I used to have people that are like, hey, can you update the prices of these daily? And I'm like, well, no, because that would be pointless because then you're watching the stock daily. We have rules in place for that, so you don't have to. Right? This is meant to be easy. So what have we done in 2019 and 2020? So I'm going to show you what these alerts have done, what this system has done. In 2019, I sent out 38 Monday morning setups, right? These weekly reversal patterns. 27 were winners, pretty high win ratio of 71%. Historically, I'm at about 65% historically. On average, about 1 trade per week and about 3 per month. Now, why do I say 3 per month? Because every now and then might not be some high quality setups, or maybe the market's selling off. I'm like, hey, let's just skip a week and let's see if we can get in next week when the market's a little lower. Average trade lasts 2 to 4 weeks, and you could have about 4 to 5 trades on at a time. Right now, I have 6. Okay, so right now it's a portfolio style. I send out 1 a week. I have 6 alerts. 4 are running very nicely. The 5th one is about to hit target 1, and the 6th one I just alerted on Monday. So it hasn't quite got there yet. But here's what I'm most proud of. An average net gain of almost 6% per trade. So that means every time, this is all the wins minus all the losses divided by the number of trades, okay? So this means that 38, if you would have pressed the buy button 38 times on every signal last week and followed the rules to a T, you would have averaged almost 6% on every single trade, okay? So because that subtracts all losses. So when you do that on a weekly basis, no matter, depending on how much you put in, as you can see, pretty well. Now, what have we done year to date? We do have a lower win ratio, but historically average is about 65%. I completely skipped March due to the coronavirus sell-off. I did. I said, you know what, something's going on, and I'm glad I did because they probably all would have been losers because the market sold off 35%. But year to date, we have still averaged the exact same 5.9% net gain on every single trade. So all 29 trades, if you take all 29 trades right now, you'd be averaging 5.9% gain per trade. Or if you want to look at it from a portfolio style, year to date, the portfolio of these setups is up 18% versus the S&P 500 is up 4%. Might be 4.5%, with today's action, something like that. But you can see, let's just call it easily 4x the overall returns of the markets, what we've done this year. So if you put it in a portfolio style, it has done significantly well. Now, most of the people I work with, they are retirement income seekers. They are looking for extra income. So I like to put together this nice chart just to show you, like, hey, let's just be, a lot of people are on this stage, right, where they're putting 10,000 per trade. If you would have taken every trade over the last 2 years, that would have been your monthly income, okay? But let's be conservative and say, all right, even if you're putting in $5,000 per trade, you're still, that's a nice income on a monthly basis, $931, and that is based on every alert and that is inside my members area, right? That would have been your monthly income if you'd have put $5,000 per trade. Here is the interesting thing. I said, okay, what if I were to just add one call option, just one, to complement the stock. So I'm still buying the stock, but I'm adding one call to go along with it. It would have added an extra $793 extra income per month, right? Just adding one call option, nothing crazy, nothing fancy. You're still buying the stock, but I'm just saying add one call option. That would have added an additional $793 per month. So if you look at it at a $5,000 per trade, $931 per month, that's what you would have averaged in the last couple of years. You would average 80, just bought one call option per trade. To complement that, you'd had 85% more for $1,700, right? So again, this is the power of, income from stocks, but it's also the power of income from stocks plus, one conservative option strategy, okay? Now, I'm a rules-based trader. I follow rules. I believe in systems because I've seen time and time again, the market it has a mind of its own. So, I mean, look at this market right now. I guarantee you, everyone that's listening right now would have never have guessed that the market was going to rally as far as it has gone. And we're in the middle of a recession. Either way you look at it, we are in the middle of a recession. And the market, the NASDAQ, everything is at an all-time high. So when you follow a rules-based approach, right, it takes the emotions out of trading. It keeps you from selling too early, okay? So rules-based systems are just like Amazon. I mean, I'm still in Amazon, and I'm glad I had my rules in place because I would have thought we'd have taken another dip down. But I followed the rules. The rules kept me in, and that's where the big profits come in. So rules-based systems are designed to give you more freedom, and even better, the smart money uses it. Right? We know institutions follow rules-based approach. So if they do it, why wouldn't we? Okay. I'm a big fan of keeping drawdowns limited. I believe drawdowns matter. Okay. So I'm the kind of guy where I'm like, I do not want to see more than a 10 to 12% drawdown in my portfolio on any single year. So I want as much upside as possible, and I want to limit my downside. And when you follow a rules-based approach, you're limiting your downside because you're not compounding your mistakes. And one thing that is also very important about a rules-based system, it allows trading to be a money-making business, not a hobby. Like I asked you, when, for those that are still in kind of that hobby mode, still in that entertainment mode, but not quite getting their account to where they want to be or where you need it to be, at some point in time, you have to make the mental shift where I'm going to turn this into a business, which means I have to turn it into a rules-based approach, or else I'm just buying and selling whatever I think, right? So these are some testimonials, and I'm just going to read these real quick. Scott sold, he said, I sold half at 8% and have been rolling the remaining ever since. Currently up 198% on a closed position and 220 on an open. Tremendous trade. So clearly he followed the rules on the stock, and then he traded the option that went along with it. Okay, made a lot of money. I get emails from him all the time. He's doing very well. Jim, you know what the interesting thing is? I actually like this testimonial more, even though it doesn't have the fancy numbers. And here's why. Jim said, Stephen, I've slowly come around to completely following your guidance and am doing well as a result. I realize that we are on a hot streak right now, but your basic principles are rock solid. I am also making some outside buys. I call it Play-Doh using your concept. So far, so good. So when I read this, it makes me happy because I realize that Jim he's not just taking the trades, he's really made a mental shift, right? He made that mental shift to follow a rules-based approach versus what he was doing and decided to turn it into a business. So I love that. So what if I were to give you my next weekly reversal pick, me send it to you for just $1, okay, just $1. In addition, I'm going to teach you how to produce the weekly income for that same dollar. I want to teach you how to fish. Not only am I going to send you my picks, I want to teach you how to do it yourself. That way you're comfortable with the process. Teach a man how to fish. So here's what you're going to get. Excuse me. So the complete weekly reversal course. I only had 45 minutes. There's only so much I can talk about, but I gave you all the rules today. There are some extra things I go in this course, but you're going to get the access to the complete weekly reversal course for just $1. Now this is a $1 7-day trial. In addition, I'm going to give you the weekly reversal signal. So approximately one per week. I'm going to send to you about an hour before the market opens every Monday. I'm going to say, hey, found this stock. This is our price target. This is our exit. This is exactly how we're going to play this, right? And then we add it to the portfolio and track it right, and raise those stops accordingly. So not only am I going to give you the more advanced course, I'm going to make the picks as well, so you can see what I'm doing, get used to it, and do it as well. In addition, the weekly reversal system, that's just one of my top 5 strategies. I'm going to give you the 5 cornerstones course, which is really all 5. It is all 5 of my top strategies. So there it is. You're going to get the weekly reversal course. You're going to get the weekly reversal signals, and you're going to get the 5 cornerstones course. Now, the signals are just the stock signals. I want to be clear. It's not the option signals. And that is a $1 7-day trial. That is a $1 7-day trial. After that, it's $47 a month. So you can stay as long or as little as you'd like. That is completely up to you. If you ever want to cancel, you just send me an email, steven@thetradesmart.com. So you get the weekly reversal course, in addition to the signals and my top 5 strategies. You can go to thetradersplan.com/exclusive. Again, that's thetradersplan.com/exclusive, and just try it out. Now, I said you can stay 2 days, 10 days, 10 months. You can stay as long as you want, cancel anytime. That's completely up to you. But if you decide to stay for longer, which a lot of people do, I'd like to throw a 12-month performance guarantee on it. This is for those of you who want to stay longer, who end up staying longer. If my alerts don't produce at least a net gain of 3% per trade over the 12 months that you're with me, I will give you all your money back, plus I will mail you a $500 check. So I'm going to repeat that. I want to put my money where my mouth is. If you stay a whole 12 months and my trades over that 12-month period don't produce a net gain of 3% per trade, I'm going to give you all your money back plus a $500 check. So I like to add that. I like to reward people who like to stay with me a while. So I wanted to throw that out there. So again, you can go to thetradersplan.com/exclusive. And I believe if you would like to go ahead and order, I'm already seeing a couple coming through, so I'm looking forward to working with you guys. And let me open it up for questions. Let me kind of start at the bottom. How much time do I have? I believe I'm doing pretty good right now. Okay.
You got about 9 minutes left. You're doing great.
I'm doing great. I like it. Okay. So let me kind of start at the bottom. Great trader. Okay, I have to go. Steven is a great trader. Thank you very much, Gary. Alberta, do you only one trade per week? I only alert 1 per week, but a lot of times I'll find 3 or 4. So I'll say, hey, this is my favorite one. This is the one I'm going to alert, but here's some extra ones that I found. That way, in case you want to trade 3 or 4 at a time, you can. Okay, so the official alert is 1 per week, but you usually get 2 or 3. The other one is I have a Fidelity account in my IRA, which I can invest. They do have stops, but not trailing stops. I can invest in option calls. Yeah, so, the trailing stop is really not that big of a deal. I don't actually use trailing stops. I just look at the 50-day moving average 1 time per week, every Friday. And if the 50-day moving average is up, I'm just going to raise my stop manually behind it. Just check it once a week. It's really not that big of a deal. Do we use only weekly charts, or would the daily charts work also? It's a very common question. Weekly charts is the answer. I like to give accurate data, and this system I've been trading for years is based on the weekly data. You can trade it on the daily, but I cannot give you any kind of performance numbers for that. And you got to keep in mind, on the daily chart, that's only 1 bar. On the weekly chart, it's really 5 daily bars in 1. So you have a lot more data, a lot more conviction in 5 bars versus 1 bars. The shorter the time frame you go, the lower your win ratio will be. Okay, so you're going to get more signals, Mike, but you're going to have more whipsaws. Is the 3-rule approach only for Mondays? Yes, it's an end of week. It's an end of week pattern. Okay, so is that 50-day? Is that 50-day or 50-week moving average on the volume? That's just a 50-day, 50 period. So the line I put on the volume is just a 50 period moving average, just a simple moving average. Okay.
So you had some more come in at the bottom there.
There's some more come in at the bottom. Okay. Okay. How much for 1 year? That's the question. So there is a pretty significant discount. You can do a $1 trial, $1 7-day trial, and then it goes to $47 a month. Or if you want to go for the annual plan, which you'll give an option to on the second page, you can accept or decline. It's $267 a year. you actually save about 60% if you go with the annual plan, right? And that 12-month guarantee still applies. What can we learn in 1 week about your picks in a week? Can we opt out after that? Sure. I mean, you can opt out whenever you want to. What can you learn in 1 week? Well, not only do you have access to, the pick that you are with me for a week, if that's all you want to say, you can see the whole portfolio. And I'm going to tell you right now, I really, really am looking forward to you looking at our portfolio, because you're going to see I have some runners in there. I have 2 or 3 Amazons in the portfolio. So that should give you all the confidence in the world that the system works if you stick to it. Yes, I do show you how to use a scan in the course. So if there is a downfall, no trades. Alberta, I kind of use a little bit of discretion, right? So in March, I didn't know what was going on, so I just decided not to trade. If the market is incredibly ugly and incredibly nasty, yeah, I might skip a week or two. Right? It really just depends. Again, I believe in quality, not quantity. My goal is to give you at least 1 pick per week, but I'm not going to send you into battle if you're going to get slaughtered. Okay? So yes, I skipped March and it was the best thing I've done so far.
Cool.
So
Do we have
I'm
any
going
other questions?
I'm going to add, if there's any more questions, I want to add one more thing. If you have any questions, I'm dropping this in the chat box. You can email me at steven@thetradesplan.com. If you have any questions, you can drop that right there. Send to all. So you have that right there. You can go to thetradesplan.com/exclusive. And that is the order form. So check it out. You have nothing to lose. $1, the price of a soda. Check it out. Look at the portfolio. Look at the stock. See if it's for you. It's a very easy to follow system designed for only 20 minutes per week. I don't see any other questions. I think I'm good. Steven@thetradesplan.com. If you have any questions, you can email me. And I really appreciate you having me on board.
Thank you so much for joining us. And that was really that was really a lot to take in. So I hope everybody that has more questions, you get in touch with Steven. And Jenke, I think what you ought to do is go ahead and take advantage of that trial, and then you'll have more contact options. So as right now, we are a couple minutes ahead of schedule. Is there anything you wanted to add? You have like 3 minutes left.
3 minutes left. Okay. So one comment, I'll just go through a common FAQ. Already commented on the daily. Another question I always get asked is, can we do this on the short side? I would absolutely not recommend that. I think that the market has a long-term upward bias, and we are in a secular bull market. So I believe most shorting systems do lose money. And I have no data to give you if you were to decide to turn this into a short system. So I would highly recommend against that. Another question I always get asked is, can I pull weekly income from this? And yes, I already definitely showed you the grid on, what you can do and kind of where, let me kind of go back to it, like where you would be at, right? I'm talking about a $1 trial. And if you were to put, over the last 2 years, if you were to take in every trade and put 5,000 per trade, that's the kind of income it would produce. So you would have done incredibly, incredibly well if you follow the system. So that's all I have. Like I said, I recommend, I'm seeing some orders come through. Everybody, I look forward to working with you. Have any questions, email me, and we'll just leave it at that.
All right. Thank you so much. I hope you have a wonderful day. I really appreciate you being with us.
All right. Thank you.
Now we're going to bring in our next presenter, which is Mr. Norman Hallett.
Sherry.
You know my song.
That's it.
So Norman's a disciplined trader. He's going to give us 5 trading discipline nuggets to get you disciplined now. Norman has been a trader and trading educator for over 4 decades. From 1981 to 1988, he ran one of the largest options firms in the country and later worked as a commodity specialist for Payne Weber. In 1991, he formed the Hallett Group, managing large trading accounts, accounts for individual investors as a commodity trading advisor. He currently owns and operates the Disciplined Trader, founded in 2000, where he focuses on helping traders with the too often neglected area of mental and emotional control and the building of quote unquote simple trading plans. That's a trademark. Mr. Hallett is a popular speaker at trading expos and countless international venues. He has over 1 million views of his 4-minute drills for traders found on YouTube, where he gives tips and techniques for being a more successful trader. And with that, I'm going to make Norman the presenter, if my computer will cooperate. He kept jumping back to somebody else. Are you there? I can see an error has occurred.
Okay, you see an arrow, you see all my stuff there. Let's see if I can show you this, which should look pretty impressive, right?
5 trading discipline nuggets. Yes,
yeah.
I can see that.
Well, thank you for having me, Sherry. And I will, after this is over, I'll sing the rest of that song for you.
Okay.
But right now, I want to make people uncomfortable. You know, Stephen probably made you comfortable. I know Simon is going to, Simon, I don't know if Simon's talked already. I think he follows me, but don't miss him. But they'll all make you comfortable. I'm going to make you uncomfortable. And then I think I'll make you comfortable after that. Because, you know, there's a lot of heroes that have been born in this last couple of years, especially 10 years, where the market's done nothing but go up. And, you know, a lot of them have great credibility. I see all of them do that I know on this presentation, but there are a lot out there. I mean, you almost could buy any stock and do well. But the markets are not always going to be like that, and I don't think it's going to be like that for very long. You know, this kind of a bull run, if you don't count this big correction, we've seen a lot of good things happening to 401ks for those people who left it alone. The problem with traders, the reason why 90% continue to lose, is that they pay little or no attention to the mental and emotional issues of trading. And if you continue to do that, pay no attention, you'll continue to have the same results. And I won't quote, I think it was Einstein that said something that I won't repeat because that'll just make you uncomfortable. But what I want to show you right now are 5 things that you can do right now that can that each one, through my experience with working with tens of thousands of traders over the years, any one of these could be the key to turning your profitability from struggle or losing to profitability. And I think you're going to understand, you're going to agree with me as you see them. So let's get into it. And I've just hinted at the trading nugget as opposed to something else. I've observed, I kind of counted them about 2 weeks ago, 28,877 students over 16 years, just with the Disciplined Trader. And I have realized that there are 5 basic nuggets that if you adopt them, if you find it's your issue and you focus on it and turn that issue around, and they're not uncomplicated. I'm going to show you how to do with each one. You can move in a quantum leap type of a fashion. That's why they're nuggets, okay? So you can have the best trading plans in the world, but you're likely not to be able to sustain any kind of winning momentum unless you are in control of what's between your ears. Now, I've written several books on building and managing trading plans. I think one or two are still available on Amazon. And I can tell you that the simpler the trading plan is, the more success you will have. Now, you can argue with me on that, and there are a lot of people with a lot of instructors that instruct pretty complicated trading plans. I don't agree with them. I think that especially, I think that a very experienced trader can get back on track by simplifying things, and a new trader shouldn't look to complicate things, should start out by looking for a simple trading plan. All right, let's get to nugget 1. Maintain a positive trading environment. Okay, now most people don't think about this. Where you work, how you work, what's around you, your support system. You need a separate workspace where it's business only. I have a room in the back of my house. It's a bedroom. The door is closed, and my wife of 39 years will not come into the room because she knows I'm trading or I'm instructing, and she'll knock on the door. She actually does a lot of coaching with me, but when I have that door closed, she knows it's business in here, and that I have to separate business from my family life. When you must focus when you trade. Okay, you need to define yourself as a professional trader. Okay, we go to cocktail parties and people ask us what we do. We almost shy away from telling them anything about trading because it's gambling. I'm a professional trader, and you must own it in order to be it. Okay, this is big. No blowout trades, and when I say a blowout trade, I mean you cannot take a loss of 10% or 15%, or you cannot do that in a trade. This is what the majority of losing traders do when they come to me, or have done when they come to me. They win, they win, they win, and then one big loss wipes all of that out. Does that sound familiar to you? You can just so I know you're with me in the chat. Does that sound familiar to you? Win, win, win. One big loss wipes out the gains. I just want to see that I'm not talking to myself here. Just give me, just throw it in the chat and let me know that you're with me here. Don't see much going on. Okay, great. All right, so no, and I'm going to get to that again in a second. Stay off the trader chat sites that ramble. Get support from friends and family. And if you have no support, meaning if your loved ones doubt you, you've got an issue. You really need to set some parameters. And I can't go into it now, but there are certain negotiation tactics you should use with your significant other. And it also gives a framework to you. If, honey, I want to take $5,000 of our money, $10,000, $20,000 of our money, and I'm willing to, but I need it as equity. I need it as my base. I'm willing to lose 1/3 of that or 1/2 of that. Don't want to, but at that point I'll stop. Will you support me and be proactive with me and allow me to have the positive space that I need and support that I need in order to not go in that direction, but to start the profitability that I know that I'm capable of doing? Will you support me, knowing that if it does recede, that I will stop and stop trading? But I need your support. You need to have the support of your family and friends. And if you don't get it, you don't talk. My mother-in-law, may she rest in peace, she used to say, she loved everybody, but she used to say, I love everybody. And if I have a problem with somebody, I just never talk to them again. So I want you to take my mother-in-law's advice, and maybe not again, but as long as you're trading, talk about something else with people who don't support you. Okay, so again, maintain your positive environment, and I mean your friendship environments and family. You need to support. You don't want the blowout trades. You need to stay away from that, and you need to define yourself as a professional trader and have a great workspace. This is probably the most important part of my talk today, and I want you to get this down because I know you're not journaling. And if you're not, you're probably journaling your trades. Today, I bought here, I sold here, here was my outcome. I bought here, I sold here, here was my outcome. That's not what I'm talking about. You can do that as far as I'm concerned. And again, I'm highly opinionated when it comes to having helped thousands of traders and seeing what works and what doesn't to turn around traders. That's not what can get you motivated and back on a positive track. What gets you motivated and back on a positive track is feeling positive and feeling empowered that you are a professional trader and that you were meant to do this. And if you just give yourself a chance, and when you make a mistake, you correct it and you move forward. You keep making decisions. You need to journal. And if you're not, I know that 9 out of 10 traders do not journal. Okay, that I know. or they journal as I'm talking about, and maybe there's another 5% that do about journaling their trades. I'm talking about journaling your emotions and your mental and emotional situation when you're trading. This is what you have to control when you're trading, okay? So this is my 1-2 punch technique. I'm gonna give it to you here, and I want you to write this down, because if you're not journaling, this is all you need to do. It's gonna take you 3 minutes in the morning, and it's going to take you 2 minutes, 3 minutes in the afternoon after you're done trading, and you're gonna journal again in the morning before you start trading for 1 or 2 minutes. Okay, here it is. All right. The first thing that you open a fresh page in your journal, and you ask yourself, what did I do right? Okay, and what did I do right? So again, this is at the end of the day, you're finished with your trading. Today, I'm giving you the example. Write this down and work off this template here. Today, I confidently pulled the trigger on every single trade my trading plan gave me. This is the way of the wise and disciplined trader. I'm complimenting myself. What did you do right? You start your journal with a positive statement about how you did. And even if you've made a million mistakes that day and you did nothing right, you showed up today to trade. Okay, think of something that you did right. There's so many people, I can't believe it sometimes when I ask them, well, what did you do right? And when I look at the trade, I can show them 20 things they did right, but they focus on what they did wrong. Okay, what did I do right? Today, I confidently pulled the trigger on every trade signal in my trading plan gave me, and this is the way of the wise and disciplined trader. Okay, that's step one. Now, step two, where did I stumble? Now, you notice I use the word stumble. Okay, where did I screw up? No, where did I F up? I don't do that. Where did I stumble? Okay, and to me, it was out of the ordinary, because I frame myself as a wise and disciplined trader. Okay, I'm a professional trader, and if you're playing games with trading, you're going to lose. I don't care if it's your first trade or your 50,000th trade. You need to frame in your mind that you have to be a professional trader. You need to act like a professional trader. So this was out of the ordinary that I stumbled. See, I look at it as something that's unlike me. Okay, so I'm going to forgive myself for it. So here's what I write. Okay, so the first thing I write is what you saw upstairs here. Today, I confidently pulled the trigger about something that I did right. Okay, you wrote that down already. Then I follow with, however, okay, I acted in an unnorman-like way. Okay, now, you don't have to use my name. You can use your name. In fact, I suggest you use your own name. I was beside myself. Okay, I have a few ways of stating, I'm admitting what I did wrong, but I'm not owning it, because it's unlike me. It's not me. Maybe it's the old me, but it's not me. Okay, so however, I acted in an unnorman-like way and lifted my protective stop on a cattle trade and took a bigger loss than designed, because I heard Jim Cramer mention something that supported my position. Okay, this is unlike me. Okay, so what I've done here is I've stated the problem. Okay, I've stated what I did wrong, and I told you why I did it. This is important. How did you stumble, and why did you stumble? That's what this statement is about. So hopefully you've written this down. Okay, so these are the first 2 of 3 parts of your afternoon journaling. Okay, today I confidently pulled the trigger on every single trade my trading plan gave me, and this is the way of the wise and disciplined trader. However, I acted in an unnorman-like fashion and lifted my protective stop on a cattle trade and took a bigger loss than designed, because I heard Jim Cramer mention something that supported my position. That's unlike me. Okay, so now you have statement of what you did right, where you stumbled, and the last part is the part of correction. Okay, here's where you correct yourself. Tomorrow, I will be the stop king and place my stop with confidence and leave it there. As a wise and disciplined trader, I adjust my stop only according to my trading plan. So I've zoomed in on where I stumbled before, because I moved my stop in my example. And now I'm committing that tomorrow I will be the stop king, and I'm going to place my stop with confidence and leave it there. As a wise and disciplined trader, and I love that term, you're not as smart, there's plenty of smart losing traders out there, but there's not a lot of wise losing traders out there. A wise person follows his or her trading plan, okay? As a wise and disciplined trader, I adjust my stop only according to my trading plan. And then I always end, I didn't write it here, but I always end my journaling with, I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. I'm going to say that again. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. So there you go. There are the 3 parts, okay? What did I do right? So find something you did right. Where did I stumble? But don't own it. Take it, you're beside yourself. This is unnorman-like. This is what I did. This is why I did it. And then tomorrow I will be the stop king. I turn it around and make a statement of correction and end with, I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does, okay? So the next morning, you're going to make a restatement of the corrective statement to begin the next trading day, and you do it, of course, in the first person, okay? Which means that you're taking this statement right here and you're making it in the present. And so you'll look back at what you did the previous afternoon, and the next morning you say, today I will be the stop king and place my stops with confidence and leave it there. As a wise and disciplined trader, I adjust my stop according to my trading plan. I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Okay, you get it? Compliment. Where did you stumble? Why did you stumble? Statement of correction. The next day, statement of correction in the first person. That's it. If you do this, this is probably the prime nugget. There's one more, but this is right in there. When people decide to do this simple journaling procedure, forget all the indicators and all the clouds and all the things. Generally, your trading plan is probably pretty good. You're just not following it because you're making crazy, I'm going to say stupid errors, but you're not stupid. You're just unwise. You make unwise decisions, okay? You're not going to anymore because you're going to look yourself in the face and you're going to say, I'm a professional trader and I'm not kidding around here. I'm here to make money, and that's what I do. In our course at thedisciplinedtrader.com, and remember it's thedisciplinedtrader.com. This course has been around in its different forms, but additional forms. It started, and we keep adding to it for a good 16 years. And at $33 a month, we show you everything about everything on how to change the way you think as far as your subconscious mind and so on. Okay, because most people need a little brain training too. But this right here is a look in the mirror. This is where you start. Okay, I didn't mean to spend so much. Yes, I did. I meant to spend just as much time as I did. What did I do right? Where did I stumble? Statement of correction, and then restatement the next morning. Okay. All right. I'm gonna ask you if you got that, because I don't want to leave until I know you got that. Okay. Just tell me you love it. Tell me you never saw anything like it. Okay. Never seen anything like this. Okay. All right. Let's get on with. Here's the. I even gave it to you. Today I will demonstrate that I'm the stop king. I place my stops according to what my trading plan dictates, and I adjust my stop accordingly. And this is my way, the way of the wise and disciplined trader. I've kind of changed that to I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. Okay, that's nugget 2. Let's get on to nugget 3. Nugget 3, develop patience when you trade, and to wait for the A trade. This is the other one that's probably the biggest. This right here, we have a mental training session. It's a meditation it's a 7-minute meditation. That's how we do it. We ask our disciplined trader mastery program customers. I guess you can get there you just go to thedisciplinedtrader.com and you'll see the choices of how you can sign up. But I'm saying to you that when we turn around the area of patience, this becomes the turnaround pivot point in trading terms. If you can be patient and wait for signals to cross and only take A trades and not be a person who has a big trade and somehow considers that profit as loose money that they can give away because you're not running it like a business. You've framed it some other way. Oh, I made a lot of money now. It's a little loose. I can kind of risk a little bit of that. And so you take a B trade. This is the way of the loser. Okay, this is not the way of the disciplined trader. The disciplined trader makes a profit, and when they make a profit, that is income in your business. When you take a loss, that's okay. That's the cost of doing business. Every business has an income and a debit, and this is what we traders do. When you make money on a trade, that's income. When you take a loss, when you pay a transaction fee, that is the cost of doing business. Okay, it's a business. You can't, every time you P&L, that's money in my core. That's not money to play loosely with. And I only take A trades. I only take the high probability trades that I have looked at in my sim. I have experimented with it. I've also traded it in very minimal fashion with small amounts of money, and then I've expanded it. I know this particular signal or two signals are my hottest signals, okay? Those are the trades that I take. And remember, most people have pretty good signals going in. It's getting out. That's the problem for most people. Okay, you've got to define what your A trade is. I guess I just did that. I'm going to move a little faster here. Train your subconscious mind for patience. Okay, we have that for you if you want it at thedisciplinedtrader.com. And it's only 7 minutes long, and you take it once a day before you start. So you take your 7-minute trading, you do your 3 minutes of journaling. I'm just asking 10 minutes out of your life to pay attention to the mental and emotional issues, because that is the area where traders fail, not the trading plan. Okay, there are good trading plans and bad trading plans, but there are good trading plans and great trading plans, and the good ones will make you money if you can stay on it, okay? But you got to find a trading plan that fits you. And again, I've written several books on it. Most of the first couple of chapters talk about how a trading plan has to fit you as an individual. Why is it that somebody can give you the trading plan, or somebody can train you, and you take a course and they're making all this money and they spout all these figures, and then when you do it, it loses? It's because it doesn't fit who you are. You must have a trading plan that fits who you are, something that you believe in the process, so that and it just can't be because this guy's making money, this gal's making money, okay? So you need to find something that fits you. You need to train your subconscious mind for patience, and you need to journal about your patience, okay, today, which means that if patience is a problem, I want you using that journal to deal with your patience. Today, I showed great patience today, except for the one trade where I listened to, Jim Cramer. I jumped in because he made me feel good. I won't listen to that. I'll rely on my building positive patience to guide me to winning outcome this year. Whatever you want to write, but be positive. It's like a sandwich. A lot of you people, you may not be old enough to remember the book 1 Minute Manager, where when you talk to an employee and you got something telling him he needs to correct, you tell him something good about him. Yeah, you're one of our best people, but here you did this lousy thing, and then at the end, I know you can do it, so go out there and do it. So that's what you're doing. You're creating a sandwich here with those journaling. I can't get off the journaling because it's so important. Could be the most important nugget, but patience, that's the other one. Okay, so you need the patience. Nugget 4, visualize yourself as a successful trader. I've kind of teased this a little bit, and this may sound a little airy-fairy to you. I'm not talking about what was that course, the system or the answer. I forgot it was years ago but I'm talking about visualizing what you put out there with your brainwaves. Your brainwaves are energy. You'll get back. Okay, so the same alpha brainwave state as the subconscious training. In other words, if you take some deep breaths and you visualize yourself as a successful trader, and I'm very, very bad at seeing pictures. I just get the feeling. I start to get the feeling. What would it feel like to be a successful trader? I will continue to my success. How do I feel when I had that big trade? And you close your eyes and you just be with that feeling. And what happens is that, I'm going to say it, the universe, I don't know why it happens. I'm not a scientist, but I will say that energy begets energy back to you. You hang around with negative people, you're going to be a negative person, okay? So if you put out positive, if you sit there take some deep breaths and vision yourself as a successful trader, you're going to be presented with options, with choices that will guide you to be a successful trader. Vision clearer and clearer in other words, don't worry that you can't see anything when you're visioning, when you're trying to meditate a little bit. And I don't want to get too much into this because it's a whole different discussion, but I will say that I'm still a person that can't see things crystal clear, but I know that by taking deep breaths and by telling myself quietly that I'm a wise and disciplined trader and I'm here to make money and I'm really enjoying this, I'm not convincing myself. See, in the beginning, you're kind of convincing yourself. But what happens is as you do it after a while, a week or 2 weeks, and you actually start experiencing more positive trading days, you actually cross that line and you wind up supporting who you are rather than trying to change into this good person that you want to be when it comes to trading discipline. So be consistent. The more important than the length of visualizing. I can only do it for 4 or 5 minutes. I'm a type A, if you didn't notice, and I can only do it for 4 or 5 minutes. You know, a lot of people, they can drift off into, I can't do it. So it's more important to just be consistent every day, okay? So I do my 7-minute meditation that we have already. I do one on patience. I do one on pulling the trigger without hesitation. Whatever I think I'm getting, maybe a little, now I'm pretty good at discipline. I don't, but I also know that, you know, if I had a thought that maybe I should move that stop, I don't do it, but that's enough to make me do the meditation and stick to my trading plan, okay? So be consistent, okay? For every action, there is an equal and opposite reaction. I do have a math degree, and I do know that particular theory, and I do believe that brain waves have been measured with MRI and advanced techniques. When you have a thought, there is energy. There is a brain energy. You put that out there in a positive way, you're going to get back positive things. I don't mean I wish I'm successful. I hope I'm successful. No, be reasonable. I'm a successful trader. I can make trades. I know that when I have a loss, that it's only part of the overall winning because I trust my trading plan. Be realistic with yourself. And the gains will come. Okay, you got to take action. You've got to get started and make it. See, because when you are a decision maker, you have to be a decision maker as a trader. You can't be a doubter as a trader. You have to have a system, a plan, and then when that plan shows itself and triggers, you must take that trigger. Because the great thing about a decision maker is that they can make another decision if they're wrong, okay? And the decision that you make after you take a trade is put in your stop. And the decision that you make after you take partial profit is move up your stop, and so on. So there's always a decision to make that's followed by another decision, another decision. You've got to make decisions. And we have a meditation or on that in the Disciplined Trader Mastery Program, okay? So let's go to nugget 5, draw a line in the sand. This is what happened. We do coaching. We're coaching, I think, 27 people now on a one-on-one basis. Actually, Tish and I, my wife is the subconscious trainer who makes these subconscious trainings, these meditations for us. And we work with people one-on-one in our program. And that's for another story. And when somebody is seems to be doing the meditations and seems to be doing some of the things, but somehow is doing it sporadically or not doing it enough as we asked them to do, you have to draw a line in the sand. In other words, you're either going to do this or you're not going to do this. I'm talking to you people now that have 3 or 4 blown out accounts, 2 or 3 or 4 blown out accounts. I mean, when are you going to change? You have the thing that you have to change is the mental and emotional issues around trading. Okay, that's what you have to change. You probably have a trading plan that's good enough, and if you don't, I'm going to show you one right now. It's our latest simple trading plan that's just terrific. But I want to show you I need to make the statement that I'm a wise and disciplined trader, and I do the things that a wise and disciplined trader does. There, I wrote it down for you. You need to draw a line in the sand. You're either a trader or not, and I want you to take a piece of chalk, and I want you to right on your office line, the line in your office. Okay, when I used to do this one-on-one with people, I used to help them in their offices years ago, decades ago. I used to take a piece of chalk and draw, and when you cross that line, you're a trader. I mean, yes, you're a husband and you're a loving father and all of those things. You can be there. That's on the other side of the line. And because you're serving those people on this side of the line, okay, draw a line in the sand and make the decision to face yourself, because that's probably the issue that you're avoiding. Because it's Jim Cramer that bothered me. All the reasons that you give, okay, in your journaling, you're not blaming them. You're taking responsibility and you're saying why you did it. It was your fault that you listened to Jim Cramer. It's not him. I mean, he's got a lot of other things you could blame him for, but not that. Okay, so wise and disciplined trader, commit to becoming this person, okay? And then you want to get support. Use it as your tag. You know, I used to instruct, you can do this if you want. Use it as a tag line in your email, or make a new email, you know, futures trader at 425 at gmail.com. Start identifying yourself and owning the fact that you're a wise and disciplined trader and you do the things that a wise and disciplined trader. Okay, put stickies around. I used to do that. I don't do that a lot, but a lot of people like that. They're big on notes and so on. Journaling, again, journaling, repeat the statement. So again, journal. Okay, so I want to give you this subconscious and conscious trainings. Conscious trainings are affirmations. I'm not a huge fan of affirmations, but used in conjunction with these short meditations that we give you at the Discipline Trader. Again, $33 a month, it's not a lot of money. And you can solve this particular issue, which is probably the issue holding you back. Subconscious and conscious trainings, okay? Subconscious training meaning the meditation. I just want, so here's your nuggets. Maintain a positive trading environment. I showed you the 1-2 special journaling, the 1-2 punch journaling technique. Develop patience to wait for the A trade. You got to do that between the ears, okay? Visualize you as the successful trader, okay? You got to use the power of your mind to settle yourself in, and then you got to draw that line in the sand, and then support and get support from all around you, and it will come when you draw that line in the sand, okay? I want you to, when this is all over, I want to give you something right here. Again, you need a simple trading. A lot of people, the trading plans are much too complicated. I've been designing trading plans for decades, and this is the best one that I think I've ever designed. It's called Loaded Gun. And my wife hates the fact that I call it, but I'm going to show you the entrance signal on it right now. But the Loaded Gun is, it's only, my trading plans usually have 2 indicators. That's it, to get into a trade. I like to get in, because if you think about it, is if 70% of your trades win, or 2 out of 3 trades win and 1 loses, the more trades you can do, the better. So I want a trading plan that I can make as many trades as I want. Okay, I'm not looking to go crazy, but I don't want a trading plan where I sit around and whistle. I want to be in the market in the right way, in the direction that's more with the highest probabilities, and I want to do that as often as I can. I'm going to give you $100 off. It's $497, but it's going to be $397 for you. For the, let's say, till the end of this. I'll give you an hour after the last speaker today. I don't want to rush through the last speaker if you didn't come to see me. But if you came to see me, do it now. And I'm only going to do this for 15. Well, I'm going to make it 20 people, because last time I did it for 15, I had a problem with emails. 100 STP, okay? 100 simple trading plan, 100 STP. You get $100 off. So it's going to be $397 for you for the simple trading plan. And you could probably click that on your screen and open another window, but I want you to come back. Okay, so I want to show you what a simple trading plan looks like. Okay, and I'm going to show you on some live charts. Okay, I'm assuming, can we confirm that you can see my live charts?
I can see live charts.
Okay. All right, thank you. Appreciate it, Sherry. Sherry. Now you got me going again.
Now,
okay.
I have been adding you as the answerer, so you can see the comments and the questions that have been coming in. So when you're ready for Q&A, you should be able to see them.
Just give me 1 or 2 right now.
Okay, so one that just came in was, do you do live trading to show your students in real time?
I do from time to time, yes, but it's not an organized thing. I probably do once or twice a month. But I'm constantly giving you. Here's a corn trade. You can see I have a nice profit in this particular corn trade. Here's the corn trade right here, and this is and I'll show you why I'm in this corn trade. And again, this works for stocks. It works for commodities, it works for FX, it works for everything. And I'm going to show you the trade. I'm going to show you a couple of the rules right now. There's only 2 rules in this trading plan. I'm showing you the Loaded Gun right now, but I'm showing you probably enough to hurt you. When I build a trading plan, I give you a trading plan that fits on 1 sheet of paper. When to get in, rules to get out, and some of the positives and negatives about the trading plan that you need to be aware of, okay? So this is, again, it's all on 1 sheet of paper. If you follow the rules on that paper, you should be very profitable. And I don't want you to believe me or my past performance, because that has nothing to do with you. You need to take a look at the 2 indicators I'm going to show you, and you need to go through charts on your own. And to say, hey, and say to yourself, gosh, this looks like it would work. Gosh, this looks great. And then start to sim trade it, and then use real money in a small, do your own homework. But I'm going to show you something right now that I believe you're going to be impressed with, which is why I want you to jump on the simple trading plans and grab the $100 off. Look at this right here. I'm going to just blow it up just for a second here. This right here, this is what we're looking for. Okay, we've come down, but we're looking for a reversal, and that reversal is a doji or spinner. It's going to be a doji or a spinner. Doji is perfect. This is a spinner being a small-bodied. I'm kind of assuming. I don't want to assume anything, but I in the course I do describe some of these simple things. But this is a candlestick chart, and this is a spinner. Or a doji means that the close is near the open. Look at this candle, this green candle. Here's where the market opened at the bottom of the green box. Here's where the market closed at the top of the green box. That's why it's green. And a candle, this body is the open, the distance between the open and the close. The wick right here, are extraneous. These are trades that occurred in the time frame. This is a daily chart. In this day, the market traded above and below the open and close range at this levels. In a doji, this means indecision, and this is important. This is why you'll believe in this system, because what I'm about to tell you right now, this right here is indecision. The open and the close were almost at the same price. You had a lot of playing around. They couldn't decide. They spent the whole day going nowhere because they could not decide which direction they wanted to go. The next bar then defines that position. Boom. Now the powers that be have now lifted in a pretty dramatic way. Remember, this bar didn't exist, but in a pretty dramatic way that now we're going higher. And at the same time, we're crossing the 8-bar exponential moving average. I didn't say 8-bar moving average. I said 8-bar exponential moving average. So when you see this and only this combination of candles, indecision, decision through the 8-bar exponential moving average, that is a buy at the end of the time frame. In this case, at the end of the bar. This works on 10-minute, 9-minute, 12-minute, 20-minute, hourly charts, 240s. I love the 240. But here is, and this is a daily chart. So let's see what happens here. All right. So now this was their buy. This is what I showed you. Okay. This is what I zoomed in on. You got a day here, and you start moving higher. When do you get out? You get out when you have 2 closes below the 8-bar exponential moving average. Okay, and there are ways to stay in if you're just a little bit below that I can show you in the nuances. When I build a trading plan, I build that single sheet that I talked about, that where you have the where to buy, where to sell, all your rules. And if you follow that, you should do just fine. But the nuances, and there are 7 or 8 of them right now in the disciplined trader load. I'm sorry, the simple trading plan loaded gun program. There are 7 of them right now, and I'm adding an 8th next week. And these are tested things that you can do to increase the profitability. In other words, staying in a trade. In other words, when you do this, where does the stop go? The stop goes below the formation. So you look for the doji, you look for the move, the power move, defining it, and then you put your stop below the 2, whichever is lowest, right below. And then the market starts to move higher. Okay, there are things that we do, and I'm going to, there's one nuance that I'll mention right now. I always take 2 positions, or if you buy 100 stocks, I complete it as 50-50, or you can buy 200 shares or whatever. But I'm always, because what I do is I always take half out at an equal to the length of the initial extended bar. So I would be taking out half right here, and then moving my stop from down here to up here to break even, and then I let it ride until I get 2 closes below. Look at this, okay? Indecision, small body, followed by a dramatic move. Now this one you have to be careful because you're putting your stop up here, and this is a valid stop, but this stop may reflect too big of a risk for your size account. You shouldn't be taking any more than 2% of your equity on any trade. I like this trade if you have a big enough account because we're coming again. I look around also, but you don't need to with the core rules. I just, this is, if you see, but a professional trader, as you do this more and more, you'll notice things like a double top. And here you have the formation that you like with a double top and and you're taking out all these lows at the same time. And look what happened. Again, I'm shorting 2 positions. I'm putting my limit buy right in this area, of which I would have gotten out of my first half right here. And I'm following this down. I'm waiting for 2 closes above. 1 close above, 2 closes above. Okay, I gave back a lot of it, but that's okay. Sometimes you will, sometimes you won't. But now I've moved my stop here. I've still taken a little profit on the second position. It's my second close. But the truth is, you wouldn't have waited for here because you would have reversed your position on this reversal signal. So you would have taken your profit here. And so I don't want to complicate things. I want to just say this is a simple trading plan that has simple in and out. Here's another one. You're looking. Here's what happens, okay? You've got a nice indecision followed by a movement lower. Look at this. Now I'm going to ask you to give me, if you any stock traders out there, if you're a stock trader, give me one of your stocks, and I'll analyze it cold right out of this in the same situation. Okay, Sherry, would you give me the symbol of any stock somebody puts up?
Yes, I will. SQ.
SQ.
Uh-huh.
Okay,
Let's
that
see.
is
See if
Square
you can see
Incorporated.
these. I'm
Okay.
gonna mark them. And I have another one. I have 2 more for you.
Okay, let's look at SQ and see if we have any signals. This is a daily chart. I actually show you this as a signal, but I won't get to it here. Don't see much here. You wouldn't have gotten yourself into too much trouble, but this would have been a signal in one of the nuances. But again, in other words, I'm not getting you in where you lose. I don't like to lose. Go ahead and give me another one.
N as in Nancy, V as in Victor, DA.
DA. Okay. One more time.
No, incorrect.
Give that.
All right, how about NIO?
NIO. Okay, here's NIO. We got a lot of whatever this is. Okay.
RB, do you want to submit another signal there?
I'm looking here on the daily charts. I'm going to go to. Sometimes you don't get. So of course, here's one here where you would be long. But let's look at this in a 60-minute. Same stock. If you trade it as a 60-minute. 60 minutes. Okay. It's telling me, but here's a signal right here. Indecision, in fact, a group of indecisions followed by a move. I always put my 8-bar exponential moving average in white. So you're in it. You're in this all the way up this day. You went from 14 all the way to 20 here before. In fact, you didn't get here's 2 closes below. Okay, actually, here is a doji. Here's a spinner followed by a move below. You would have been out here, and you would have reversed your position, of which you would have had you stop up here. You're looking for 2 closes above, and you would have had your second close here. But there is a nuance that would have kept you in here, or you would have taken a short loss here. But if you followed the nuance, you would have been in it for this. And so you can see that. Let's even look at I'm just going to go one stock. Let's say a lot of people follow the 240. I need some history, but you can see right here, doji or a spinner followed by a dramatic move. You would have been in this all the way. So you can see this works really well on stocks. It works really well on commodities. Give me one more. And how much time we have? I got about 3 minutes. Give me one more while you got me.
All right, let's just see what we got. Anybody got another one?
Anybody got another one or a commodity? Okay, I'm going to show you. Let's go with gold.
GOLD.
Oh, here's gold. Well, yeah, I'm going to give you the gold contract. And I marked this one up already because I was using this as an example. Spinner, move higher. I mean, here's one. Spinner, move lower, big move down. Spinner, nothing here, right? Actually, this is a skip, what I call a skip, but that's in one of the nuances, so I won't count that as the basic. Here's a basic. Spinner, move higher, nice move. And you take profit here on this reversal, of which you would have given back just a little bit, about 1/10 of what you made here. Here's another buy right here.
We got about 2 minutes left.
Okay, great. And so again, here's a sell signal, but it probably wouldn't take it. Only the bigger accounts could take this because it's it's a big risk here. Okay, let's look at and if you I'm gonna supersede that and just look at a 10-minute gold chart, since a lot of people are trading gold. It's been cleaning up in gold. Here's one of the kinds of signals I like, where you have a big tail with the doji, okay, with the spinner. And so you got here's another one here, okay, which led to this move up. Here's another one here, which led to this move. Now, I don't, if I do it yourself, you're going to see the same kind of repeated positive results in this plan. I just want to show you one more thing, because I've got about a minute left, and I think it's in here. This is where you're going to put, here's the page that you'll go to, simpletradingplans.com. Again, remember STP, 100 STP, that's where you put your coupon code, okay? And you'll come to this sales page. You've got a personal guarantee from me, 60 days, use it. And here's the one sheet of paper that you get, and all the nuances. You can read about all of those. So I really appreciate you having me, and here are a bunch of case studies. Oh my gosh, you got to read some of these case studies, and go to the page. If you want a simple trading plan and you want to get aboard with me, start working between your head and between your ears, get a simple trading plan, and let's get going. Thank you so much, Sherry, for allowing me to present.
Thank you, and you have a wonderful day.
Thank you.
All right, everybody, we are now down to the wire. We have one more presenter coming up, and that would be our friend over at hitthebid.com, Kenny Glick, also known as the Warlock. Can we hear you, Kenny?
I hear you.
Okay, I can hear you. I wanted to tell everybody who you are and what you're bringing in here today. It's called VWAP for your mind. And he's going to tell you what VWAP stands for. Kenny Glick has been trading since 1994. He's a frequent day trader. Kenny's been vocal in his support for the day trading community. His trading style mixes highly actionable short trades with controlled risk management. Active and profitable through both the 2000 and 2008 financial downturns, Kenny now splits his time between trading and teaching others to trade through recorded and live video. Kenny's style of trading instills discipline in his students, which is something most lack. Unlike anyone in this industry, he offers free access to his website in order to demonstrate his tactics, so that any new prospective clients can get a true idea if what he does fits their needs. So take it away, Kenny. Let me make you the presenter. And here we go.
Let me know when I'm ready to
Appreciate you
rock.
being here with us today, and take it away.
All right, so show my screen. Let's go screen. I think it was screen 3. Oh, screen 3.
It was indeed screen 3.
All right, do you see me?
I see your screen. I see your symbols and your ticker alerts. Everybody
All right,
can
awesome.
see.
You're seeing exactly what all you need to ever make money in this industry. What's up, everybody? Kenny Glick, that was a great introduction. Thank you very much for that. You also failed to mention I'm on 3 edibles right now and 19 cups of coffee. So let's rock out. What's going on, everybody? I hope you've all had a profitable day. Let's talk about volume weighted average price. I've been trading since I was a fetus, and about, I would guess, 7 or 8 years ago, I was doing a training session like this one, and somebody was looking at my chart setup, and I didn't have volume weighted average price on it at the time. What I did have was red lines and some moving averages. I was experimenting with stochastics and Bollinger Bands, and there's 10,000 studies to choose from. I tried to keep it simple. And this kid said to me, hey, you know what? A lot of the charts that you're plotting are right around VWAP. And I was like, who cares about VWAP, kid? It's just a number that the institutions try to gauge their traders on. If you don't know what VWAP is, it stands for volume weighted average price. As you know, this market has been taken over by the algorithms. The algorithms love volume weighted average price. It basically is the EKG of the market. It tells you where the strength of the stock is. It tells you where the stock wants to be. It's basically the #1 average to look at the end of the day. So originally what VWAP was for most people was, let's say you're working for the Glick fund, and I say to my trading assistant, listen, we need 65,000 shares of the QQQ on the books by the end of the day. So how do we judge the kid that's working for my hedge fund if he did a good job? Well, I want 600,000 shares of the QQQ. At the end of the day, he better have beaten the VWAP price. So this blue price right here is your VWAP. So 30.66. All right, let's take a moment to reflect on what this market's all about right now. We never go down. The QQQ is the king of all stocks. Today, for the first time in what seems like 5 months, we actually tried to sell off, right? And here it is. So let me go right through the process of what we were doing this morning. And again, as our host was saying, I don't sell stuff until I prove myself. Okay, I've been in the business for 25 years. What I do in my website is I let people come in and witness me trading in front of a live studio audience, more or less. If you're impressed, if you're flabbergasted, if you're stunned, if you're mortified, if you're just, you can't get enough of it, then maybe we let you into our club, because it's more like an investment VWAP cult, so to speak. But the greatest part of the VWAP, right, is that it really is, like I said, the EKG of the market. It shows you where you want to be. So look at the blue line, the pre-market, just hovering there. Market's gapping up as always. We never go down. The government owns the market. They're never going to let it go down. We're probably going to rally another 20% into the end of the year, blah, blah, blah. We never go down, right? It's insane. Some stocks are up 300, 400%. Enough of that conversation, right? Give me a reason to sell. Well, here's a reason to sell. When you're breaking the VWAP, which is the most significant thing you'll ever see if as far as trading is concerned, if you're breaking the VWAP and you're breaking a near-term range, basically the low prints of where the stock was holding, let's forget about these two candles, those were anomalies. If you break down, look at the pre-market. You're breaking down under the blue line, and now you're breaking the lows from the pre-market. Look at this sell-off. You finally actually got a sell-off that stayed red for a whole 20 minutes. We actually sold off for 20 minutes today. Absolutely insane, mind-blowing, right? But here's where it got interesting. For the first time in about, I would say, 3 or 4 weeks, we weren't able to get back above the VWAP. So once you can't get back above the VWAP, that proves where the market sentiment is and that there is a reason to finally be bearish. So you failed to hold it here, and then you tried to rally back there. So now going back to the idea of ranges, right? Look at the low prints from this morning. We bounced back to the VWAP, couldn't hold it. And next thing you know, we're rolling over, giving us another opportunity to short. Now, fast forward to what we're seeing right now. And if you Google me, you'll see all my conspiracy theories. And I know you don't see my face right now. You probably don't want to see my face, but I'm all over the internet. Kenny Glick. I've been talking about this stuff since 2008. The government has taken over the stock market. They did it in 2008 to save us, and they saved us from the pandemic. So now the market is actually broken to only go up. So every time the market tries to sell off, all you need to do is wait for the stocks to break back over the VWAP and buy them. And that's how easy today was. So you're finally getting the sell-off, right? Oh my God, all those articles about how the market's going to sell off. Oh, it's a blow off top. Oh, you can't keep going up like this. All right, yeah, sure. The government owns the market. We can go up forever. But we were selling off. But then look what happened. We got back to the VWAP. And when I say you should build your own ranges, look at what we did. We hovered above the VWAP for about an hour. Next thing you know, we're breaking out. So VWAP's telling you, listen, it was fun that we shorted the market this morning. That trade's over. You better cover and you have to go long. So this is just one example on the QQQ. There's a VWAP story on every stock because it is the EKG. It is the bloodline of trading. It's the only thing, especially if you guys are just getting started in this industry, It's the only line you need on a chart. And there's only one other line that's important. It's a multiple time frame VWAP. Raise your hand, not that I could see you or anything, but raise your hand if you've heard of multiple time frame VWAPs. Your blue line is your standard. That's your 1 minute VWAP for the day. What we have is something called multiple time frame VWAPs. Because we have noticed over the last 7 to 10 years that the government and the algorithms have taken over this market, if you get a VWAP break, it usually what we call price discovery to the next VWAP. So if you have a stock that was hovering below the 1 minute and the multi-day, I know I'm talking slow, but I'm trying to cram 30 years of trading knowledge into 45 minutes. So let's just keep going, right? The idea is that if you get one VWAP, you basically gravitate towards the next one. But I want to show you a couple of trades from this morning that we did, because again, shorting this market is basically un-American. It should actually be illegal, and you're insane for even thinking of it, because you just can't make money shorting. And personally, the whole reason I got into trading was to short stocks. So right now, it's a very difficult market for me personally, because I love to short stocks. That's why this morning was so fun. You guys all know about Zoom, right? Stock tacked on $38 billion in market cap in one day. That's generally not supposed to happen. That's something that happens over years, but this happens now every day in this market. So rationally, you have to think, hey, maybe there'll be some profit taking. Yeah, rational thought. That's been working in this market. That's sarcasm. But give me a reason to short it, and I will. So fast forward to the Zoom trade, right? What you're looking at again is a 1 minute chart, and you're also looking at the prior day VWAP, was the dotted orange chart, the dotted orange line. Look at the stock in the pre-market, just chopping around, no real rhyme or reason. So I'm going to just go back to the beginning. Hang on, clear this out. There's your top of the range from the morning. There's your bottom of the range, right? So as soon as the market opens up, what are you seeing? It's getting rejected at the 1 minute. It's breaking the multi-day. And then at the open, nobody's home. And you were able to short this stock for a whopping 15 points. And then if you milk the trade a little bit better than we did, you could have made 25, 30 points. But then look what happens. Fast forward through the rest of the day. So you're hovering below the VWAP. First rule of VWAP trading, or first rule of Fight Club, there is no Fight Club. First rule of VWAP trading, never, ever, ever stay short a stock that's breaking over the VWAP. Are you insane, right? So the Zoom sells off, it's chopping around, it forms a new range, and then look what happens. As soon as it breaks the VWAP, as a VWAP devotee, that stocks that break back over the VWAP that were shorted in the morning usually are going to be covered. So look at this move. Let's assume you were looking for a reason to buy this stock. Bang, $423 rips up 10 points right there just on a VWAP break. But again, didn't do that trade. We were all about shorting this morning. So if you came in this morning like me, I'm thinking this market is due for a pullback. But again, that's rational thought, and rational thought doesn't work in this market any longer. Nothing really does, except for VWAP. So here's some other trades that we did. I know I'm jumping around, but if you guys know NIO, right? Chinese car company, the wannabe Tesla of China. For all we know, it's two Chinese guys sitting in a car in a parking lot right now pretending they own a company. You don't know about these stocks. But what you do know is that here's your VWAP range, right? Look what it did in the pre-market, and that's why volume weighted average price is phenomenal. You want to trade stocks with a lot of volume, hence the name, volume weighted average price. It's giving you a gauge of where most of the volume went in on the stock, which is where the institutions are making their moves, where those are the people who are moving the stocks. So just like the Zoom, just like the QQQ, chopping around pre-market, you got above the VWAP for a second, but next thing you know, you're breaking below the VWAP, and you're breaking that pre-market range, and then sliggity ding dang, you're breaking even the pre-market lows. Now you have to be shorting. So we went from thinking this thing was about to break out to flipping the script and immediately going short this thing because of the 1 minute VWAP break. And look where it went to, the multi-day VWAP. So again, as a day trader, $20 stock, usually what are you shorting? A couple thousand shares, you're shorting here at 2056, you're adding a little bit there at 2020, you start covering it down there at 1990. Next thing you know, the stock tanks another $1. Now check this out. Multi-day VWAP, it crosses all time and space, right? So you got the 1 minute, the blue line. Your first multi-day is right here where we started covering a little bit. But then we looked at the multiple time frame. So you're looking at a 1 minute, 1 day. Now you're going to look at a 1 minute, 2 day VWAP. Check this out. Oh, look where it went to. Now it's been adjusted because this is a living, breathing average. It went right to our target to the penny and bounced right off it. Now fast forward to the next move that it had. If you can't get back above your 1 minute, the trend is still down. The bears are still in control. Remember, under the VWAP, you still have to feel negative about the stock. Even if it's still up, you got to feel a little bearish. So now, because it didn't break over the 1 minute, look what happened. It tried to hover at the multi-day, and then finally, you're breaking down. So you had actually another opportunity to short the stock. Obviously, you took some profits. You got stopped out of the rest because you never let it go back above where you shorted it. And look what happened after that. Boom, bang. We were short here. We were short here. We shorted it again there. Got stopped out of the rest of our trade right here. And then next thing you know, hey, look who's breaking VWAP. Oh, didn't hold it for more than a couple of minutes. Took a small loss right there. Very tiny loss. And another great thing about VWAP, if you're trading around the VWAP, usually your entry points are so awesome that when you do lose money, it's not a big loss. It only becomes a big loss if you ignore your disciplines. But then 15, 20 minutes later, you're back above the VWAP, and now you're breaking that spot where it couldn't break before. Again, we got a little bit of revenge. Bought it again at 1965, got up to 1985, sold a little bit, and we're probably going to get stopped out of right at break even. I never let trades go back below where I bought them once I'm making money on them. So there you go. There's another trade. So we did QQQ, we did ZM, and everybody knows about your favorite bike company, which I still don't understand. But again, I'm not here to make heads or tails of any of this stuff. I just trade VWAP. So Peloton, to me, this is a $20 company, $20 stock that's masquerading in the 90s on an exercise bike company that will probably not even hear of in the next 3 years. I don't know what your opinion is. I don't really care because I don't care about any of these stocks. They're all just numbers and letters and prices and VWAP. So I came in thinking, oh my God, I can't believe this stock's in the 90s and the fact that it got upgraded. Always, let's just give it up for the analysts for 1 second. Let's take a moment to reflect. Let's give it up for the analysts who upgrade a stock that has just rallied from 20 to 90. Yeah, he didn't like it at 20, 30, 40, 50, 60, 70, or 80. But at 90, now he's putting that upgrade on it. Awesome. He went to school for that and everything. So what are we doing? We know the analysts are always chasing performance because they know nothing more than we do, right? So chopping around, double tops already in the pre-market. Give me a reason to short it. Breaking the VWAP, breaking the pre-market range, and then breaking even lower. Boom, we're shorting that stock. Now check it out. Look where it went to. Best trade of the year right there. Shorten this thing at 90.50 with a target of 85. Look where it went to the multi-day VWAP. Look where it bounced back to the 1 minute VWAP. This is why I don't sell products. I display the joys and wonders of VWAP. You're going to be flabbergasted, stupefied. You're going to be clamoring for more information. That's what I do. So if you've heard of me, if you don't know who I am, Kenny Glick, hitthebid.com. I've been around for 25 years. My process is basically showing people how to read the tea leaves of the VWAP. Within 2 or 3 weeks, you'll be dying for more. And then we start talking about multiple time frame VWAPs and how to draw your own ranges. And if anybody's interested, all you got to do is email me. I do a Thursday night session where we get together. We have a few alcoholic adult beverages, and we schmooze from 9 p.m. Eastern Standard Time till usually 1 o'clock in the morning or until I pass out. And we just talk about VWAP and how to prepare our trades. The reason we do it on Thursdays is because I love trading options on Fridays. So I know I can't see you guys in the chat room or any of that stuff. I'm just going to keep on talking. The reason I like trading options on Fridays is because if you have one of my trades, these VWAP reversal trades happen on a Friday, right? These trades work about 80% of the time. What's that? Yeah, 80% of the time. Can you backtest that? Yes, I can backtest it. 80% of the time when I find one of these 1-minute multi-day VWAP trades, they work, meaning they follow through. You get paid on them. So if you find one of these trades on a Friday with options expiring, there's no extrinsic value on your option. You're just trading the option in the money, but now you don't have to pay any premium. So if you can catch one of these reversals on a like I say, a Thursday or a Friday, Friday's even better because they're the cheapest they can be because they're expiring at 4 o'clock. You can parlay what I teach about these VWAP trades into options. And that's basically all I do every day. I don't even consider myself like, an investor anymore. I trade VWAP. That's it. Because it has changed the way that I look at the market, because it really is a true gauge. So here's something I want to show you. Now, I know I'm jumping around, but you remember when the market went down? I know it's been a while, right? Remember that pandemic that we were having? Yeah. Remember that? Cool times, right? Fun. Let me just show you what the YM futures did. So this is the Dow Jones futures, right? So the market's crashing. Nobody ever thought we'd be back below 20,000, right? Look at what the VWAP. Now, I'm going to show you a chart that's almost kind of hard to believe. Let me find it for you. And it's on I believe, the 10-year VWAP. Now, again, it's been altered a little bit because of time, because it's a living, breathing beast. But look how the market sold off 10,000 points. And where did it find some stability? At its 10-year VWAP. So after it held that and started to bounce, we felt comfortable enough to start nibbling away and start buying stocks, knowing we had the VWAP to protect us and the bottom of the range. So as all trades are, risk, reward. Am I risking more than my reward, or am I risking less than my possible reward? Obviously, if you're buying the diamonds down there or the Dow Jones at 19,200 and you're only risking, 40 points on an $18,000 index, I know it's hard to put those numbers into simpler terms. You could trade the diamonds, DIA, same kind of thing. So you're seeing it right now. The diamonds are the YM futures. Those are the Dow. Limited risk for unlimited reward. And that's why it's so amazing. So let's go back to everybody's favorite stock, Tesla, right? Same scenario as the ZM, same scenario as the Peloton, right? Pre-market, chopping around. VWAP's telling you there's a negative bias to it, right? When's the negative bias? When is the negative bias confirmed? When it breaks the bottom of the range. So you're below the VWAP, you're breaking the bottom of the range, you're a shorter of Tesla at 474. Now, again, this one, the multi-day VWAP was above our price, so there really wasn't that great of a gauge on the way down. But on the way down, you're trading a stock like that, you're risking 5 points. You better be looking to try to make 10 or 15 points, and obviously you did. So amazing stuff. So if I was able to see what you guys were, chatting about, or if you even had the ability to chat, you could take any stock, index, futures,
We do. We have some
anything.
questions for you in a little bit.
Yeah, go ahead. Oh, I thought you had a question.
Well, we have a few for you, but I didn't know if you were ready for them. And I've been tagging you, so if you open your chat, you can see if you want to answer them on the fly.
Oh, nice.
Or the questions tab.
Gotcha. I see you. Let's see. Let's try to get that to work. Wait. Wait. The window is kind of like smushed up. Let me try to stretch that out for you. But yeah, I love answering questions because that's what I do. I've been pretty much answering questions. Originally this whole thing got started, me trading, and I was on an AOL chat room. That's right, AOL. Anybody remember that? I launched an AOL chat room. I grabbed 20 or so guys. I shoved them in that room, and if they had questions for me, we would use AOL and a messenger. Back in the day of MySpace, I still can't see the questions. So let me try to get this bigger. Let's see, questions. There's like a window in front of it. I don't know why.
All right, I can help. Let's see. I had a bunch of people say, hey, George and Thomas and Benjamin. And then I am says, Kenny, does the VWAP technique work only on intraday, or is this also applicable on weekly and monthly charts, except obviously much slower movements? Thanks, you rock. I follow you on Twitter.
Hey, thanks, man. It works across all time and space. That's what's amazing about it. So if you're a swing trader, like for instance, if you're in the QQQ, right, and everybody should be because it never goes down, it tried to go down, right? The way I've been looking at it is that what I've noticed, and again, this comes with experience and experimentation, right? If we don't break under the 5-day VWAP, so basically like a weekly, if it doesn't break back under the 5-day VWAP, the trend has been still intact. So for you swing traders, and you're getting scared because your stock's selling off and maybe it gets through the 1 minute, if you really are a devout VWAP follower, let it breathe down to that 5-day. You're never going to sell the top, right? But VWAP's going to give you a lot of different areas where selling is prudent. So you could sell some at the VWAP on the 1 minute. You could sell some at the multi-day, but it's usually the 5-day VWAP that has been the line in the sand as far as complete trend reversals on a swing trade. Because like I said, you want to give it some more breathing room as a swing trade by definition. So I want to show you something that was interesting on this Rocket Mortgage. By the way, Rocket Mortgage just became a short. Let me show you why. But Rocket Mortgage, right? I own the stock. I bought the IPO. All right. The stock's rocking. Next thing you know, I'm buying more. But then it rolls over and dies and has like 5 or 6 days of awfulness. What you're looking at right now is basically its lifetime VWAP. This is every VWAP the stock has had since the IPO, right? So let me show you guys on the other side. What you're looking at here, that multiple time frame VWAP, this is now like, let's call it a monthly VWAP, right? The stock made its turn and then broke back above that 2149, which was the multiple time frame VWAP at the time. And that's where you got to buy the stock back. If you had sold it on that down move, you have to buy it back here. And then because it broke back over the multiple time frame VWAP, once it broke back above the IPO highs, it became a screaming buy. And now look where support is, right around that price. But fast forward to what's happening right this second on Rocket Mortgage. Look at this. Chopping around all day. They're going to report in about 45 minutes or about 15 minutes. So, people are getting out of the stock just in case they say something bad. Usually I'm not a big fan of owning stocks into reports. I still own this one because, again, this is the craziest market I have seen in my life, and I'm starting to break some rules. Normally, I'm not holding stocks going into reports, but so far, after I've seen Zoom and Apple and Amazon and and 90% of stocks have been rallying 15, 20%, even on top of their 100 or 200% moves, I got to stick it out with this thing. Even though if you're a true VWAP supporter or devotee or minion, you just dump the stock. You don't care about the earnings, right? If you're a swing trader, you're going to have to sit through the earnings. But right now, if you're sitting there watching Rocket Mortgage all afternoon, next thing you know, it just broke the VWAP. There's no debate. Sell it. Or if you're not in it, go short. Look at this move. This is 33.17 down to 32.11. That's a day's pay right there for anybody. You know, $30 stock going down $1 in 11 minutes. That's pretty sweet, right? So late day VWAPs are pretty awesome too. So let me show you another trade that we did, ALT. I don't know what this company does, don't care, right? ALT, no idea. I saw it on my radar because it crashed down earlier. I missed the sell-off, but then look what happens. I want to show you on a 1 minute, 1 day. Oh my God, look at that. So the reason that VWAP should be your Lord and Master is because it gives you an in, and quite often it gives you an out, and it gives you a target. So if you're buying the VWAP break here, these little gray lines are your deviation bands. Coincidentally, it held that 14, which is the lower deviation band. For me, I call it a range. If you break back above the VWAP, you know you don't want to be short the stock. So if the shorts are going to have to cover, why don't you buy it? You're limit your risk, right? You're buying this thing at $14.30. You obviously see the support there at 14. But what the multi-day is doing here for you is it's giving you a target. So if you know that stocks that break the 1 minute usually gravitate to the multi-day, hello, right? You're buying it at $14.33, you're risking 30 cents, but you're looking to make at least 65 or 70 cents. So that was only your first multi-day. So then what I like to do is I scroll to see if there's any other targets. The second multi-day is all the way up there. So again, there's your risk reward clearly defined. I'm risking 30 cents. I'm either going to make 70, possibly $1.50. Why not do the trade? Risk reward clearly defined in your favor. So I just want to show you one more trade. Did the Qs, did the Neo, did the ZM, and I didn't get the Peloton. I think I did the Peloton, I did the Zoom, and let's go back to the QQQ for a second. Now guys, you realize no matter how good of a trader you are right now, it's pretty hard to beat what's going on. Passive investing right now is where it's at. And that makes me mad because it takes away everything I've learned for 30 years. Because you could basically buy the QQQ, take 16 Ambien, wake up out of your coma 5 days from now, and you've probably outperformed and outproduced 95% of the people on Wall Street. Guys that went to school for this, geniuses, super geniuses, hedge fund managers. The market's owned by the government, it never goes down. So it's really hard to beat what's going on, but the only way you can compete is using VWAP because it is the market. So if you're going to do anything else other than buying the Qs and going into a coma, right? Because most of us want to be active traders. For me, it's the most annoying market I've ever seen in my life because you can't short for more than 20 minutes. I really like when you could short stocks because shorting is professional trading. When you can make money where most knuckleheads are making, you know, again, everybody's a genius in a bull market, right? You could bang your head on a keyboard, hit buy, 3 days later, you're probably up 20%. That's the market we're in right now. So it's hard not to just want to conform to that. I guess I'll just buy the Qs and wake up in 5 days, which probably is what you want to be doing right now. Even though we've rallied, look at this chart. This is a chart of the Qs. We've gone up pretty much every single day since April 7th, where we broke back over the 1 year VWAP. We've pretty much gone up every single day. That's not a normal market, right? We have stocks that have rallied thousands of percent. Overstock, Wayfair. Come on. I mean, even like Bed Bath & Beyond, they announced they're going out of business. The stock goes up 300%. Makes no sense. But you can't short the market, right? Because the government owns it. So the only time you should be trading is when you're getting a VWAP trade, because those trades are working still in any environment. And you could actually short the market or short a stock when it breaks VWAP, because that is an indication of true weakness. But always remember this phrase: shorting is short-lived and you're going to die. Because if you stay short this market, you will lose all your money. You will be broke in 3 days. We just don't go down. And what is great is that once you start using the VWAP, that decision is made for you. If you choose to ignore the power of the VWAP, you deserve to lose your money. Let that one sink in. If you know that anytime a stock breaks over the VWAP, usually the downtrend is over, and you decide to say, well, let's see what happens. I heard you can't stay short if you break the VWAP. Oh, well, I don't give a shit. Let's see what happens here. Okay, well, now you're down 3.5 points on a short that you were just making money on. Now you're down 3 points. All right, you want to stay short? You want to stay short? How about, I don't know, short NEO? You want to start NEO? You can't be short anymore. It broke the VWAP. You just can't stay short stocks that break over the VWAP. So once you start to realize that and you start to see it in action, all I do, because again, I'm a closet bull. I mean, I'm a bear in a bull suit right now. I'm pretending to be bullish because I got no choice. So all I'm doing is I'm looking for stocks that are hovering below the VWAP, knowing that these idiots, or as I call them, schmucks, and I'm one of them. I've been a victim of shorting my whole career. I like shorting, but now that I have VWAP in my life, yay, I know that the decision will be made. And if I stay short, like the Qs today, and I was short the Qs 3 times today, ain't no way I'm staying short when you're breaking over the VWAP. That was at 300. Now we're back to 303, 350, right? Just don't stay short stocks breaking over the VWAP. It's one of the most amazing phenomena I've ever seen in my life. And this chart that you're looking at, the 1 minute deviation bands and multi-day, I have not changed my chart in 8 years. Not once. This thing works. So again, to what we do in here today, I know I just ripped right through all this stuff. You probably got your heads are spinning. Do your due diligence. Find me on the internet. Come hang out with me and my crew. You can email me directly at the Warlock. Yes, the Warlock at hitthebid.com. Hitthebid.com is my website. And what I do, unlike most people in this industry, is that I let you kick the tires, ask me questions, hang out, pick my brain, see what I do, look at my trades. You'll see my winners, you'll see my losers, and oh man, you'll know about my losers, because just like we all tend to do, oh, I harp on the losers. Oh, I'm really hard on myself, and you'll all know about it. When I make a mistake, oh man, you're probably gonna be begging me to shut up. We get it, you did a loss. It's the guy that doesn't learn from his losses that quickly fails in this industry. So what I do is I let you sit here, watch me trade. You'll see one of my buddies that I've trained who's still with me for 13 years, started as a student, now he's part owner of my website. So the bottom line is, I know we just met. Google me, find me, come and see what we do. If you're impressed, then we talk membership. That's it. That's how I run. That's how I roll. And again, if you want to start tomorrow, we're having our schmooze fest. So be prepared to talk about VWAP. Be prepared to have a couple of adult beverages. If you don't drink, you can do whatever you want. But it's a loose atmosphere. We have a lot of fun with it. Just email me at thewarlock@hitthebid.com and we'll let you in. So I wish I could see. I don't know what's wrong with this thing. I'm gonna try one more time to get this scroll down.
If you click on the little pop out for the questions, you should be able to see it. But I'm also seeing, do you trade futures?
Yes. Yes, volume weighted average price works on futures phenomenally because there's not much noise. You know, when you're trading the stocks, you've got the market makers, you've got lots of bids and offers, and especially now that we're trading in penny increments, we used to trade in eighths back in the day, right? The futures breaks, yeah, let me just show you on the NQ futures. Here's the NQ futures. Looks exactly like the Qs because it is the Qs. So what's cool about the trading the futures is that you could do it in the middle of the night, right? So I want to just show you a VWAP break that we had. It was 1 in the morning. All right, so here's last night's session, right? Nothing really going on, but you're hovering above the VWAP. So when do you want to strike? When it convinces you that we're not going down by staying above the VWAP, and then what happens? It breaks back above the range where it got rejected. Next thing you know, we're rallying 300 points on your futures contracts. So again, I've never seen a market like this before in my life, and I've been doing this my whole life. I've seen dead markets, I've seen crazy markets, I've seen every crash, I've seen every flash crash. I've never seen this market before. This is the most absurd market I have ever seen in my life. It makes absolutely no sense. And on that point, we have to just stick with the trend. So the trend is your friend. There's no reason that this market is not about to take off another 20% from here, possibly 100%. That's right. I'm saying it. We're about to double. If the government's going to keep pumping money into this market and fundamental analysis doesn't work and valuations have no place, then why can't we just go straight up in perpetuity? There's no reason to sell. So what happened today, as we tried to sell off twice, all this did was added fuel to the fire. What today's sell-off did was convince some people to sell, and they're chasing to get back in. You got people to go short that didn't cover. They're scrambling to cover right now. This is the most unrelenting bull market I have ever seen. Will it end badly? Who knows? But that's why VWAP is so important, because when we do actually sell off for more than 22 minutes, oh, I'm sorry, we actually sold off for, I think, 26 minutes today. It was so crazy, a 26-minute sell-off. The day we stay below the VWAP, that's when you'll have to change your attitude. So once again, you're back above the VWAP, you can't be bearish the market. So there's going to be a day where we actually break the VWAP, break the multi-day, and then the most important part of that equation, if you're bearish this market and you want to go short, make sure you're breaking that 5-day VWAP, or at least tomorrow or the next day, you have to break the prior day low. So what VWAP's doing, it's grabbing this data from this sell-off this morning, right? And it's going to calculate it and spit out a number for you tomorrow. So today's 1 minute and 1 day, the 1 minute, it will always refresh at the beginning of every day. The multi-day is taking in the data from the day and the prior day. Man, I talk fast.
Yeah.
I guess that's what 19 cups of coffee does to you, right?
So we got another one. Will wants to know, when we join you, how do we get the different VWAP indicators?
Oh, okay. Well, I like, if you're in the tri-state area, you can come to my house. You could cook food for me and my family for a week, then I give you the code. Or you become a member of our cult, and then I send my coder to your house, or no, virtual house, and he codes your charts up for a nominal fee. Again, we're all about time. You know, I'm not selling you some, secret strategy. VWAP is a living, breathing thing. We're going to just show you how to get it on your charts and how to read the tea leaves. So, after a couple of weeks of you starting to see, damn, this is the way I want to be. This is how I want to trade. You come up, we just have a couple of different membership structures. It's really just all in. You join us for the next 3 to 4 years, because let's not pretend. Putting some stock on your chart and having me talk to you every day, yeah, you'll learn some stuff. But sitting through a seminar, and I used to do those, those day trading seminars, what is it called? The Day Traders Expo. People paying $600 to hear me talk for an hour. And at the end of the hour, I'd say, all right, so does anybody even remember what I was talking about? You only remember the beginning. You remember some of the end. You meet the meat in the middle. Most people don't remember. So that's when I started doing this new thing. I was like, you know what? Let's not pretend. Let's go over what we learned for the next 6 months and put it to good use. So I run it the way I would want it to be run. You know, learning some stuff, put it to use. And I do every 6 weeks, I do a refresher course. I do these Thursday night sessions. It's always just refreshing and learning, refreshing and learning, refreshing and learning, and then experiencing what you've learned and putting it to use. And the more you start doing that process, next thing you know, hey, this does work. I'm a profitable trader now. And then the next thing you do is you take your size up a little bit, and then you expand. And then, of course, just take any money you ever make and buy the QQQ with it, because we never go down. All right, my friends, I think that's my time. It's been nice to meet everybody in there. Thank you for letting me rant and rave.
Tell us again how to get in touch with you and what to do next.
If you want to get in touch with me, the best way is my personal email, thewarlock@hitthebid.com. So it's spelled just like it sounds. Oh, by the way, Rocket Mortgage down 5 points, 10 points, 20 points. What happened? Holy moly, I'm getting annihilated. What happened to Rocket Mortgage? Bad earnings? Did that just happen? Let me just hang on a second. RKT, I have a position on. Oh my God. You gotta love VWAP. Oh man, did it tell you the truth there? You seeing what I'm seeing here, guys? Look at the VWAP break and look at where the stock is now. Oh, Billy, you gotta love VWAP. It just tells you the truth. So anyway, email me, thewarlock@hitthebid.com. Hit the bid. It's HITTHEBID. Maybe you guys, when you start looking at my videos
a couple
online.
times too.
What's that?
I posted it for you a couple times too.
Oh, thank you. Formerly known as Suck My NASDAQ, but that's a different story for another day.
Let's keep it PG here. All right. Thank you so very much for being with us, Kenny. This is great.
All right, that was fun, ripping right through that.
That
but
was
I'll answer more of those questions when I see you tomorrow night in the schmooze.
I got to tell you though, Brad said Kenny has helped me make a lot of money. You talk about instant gratification. So there's a testimonial for you.
All right, thanks very much.
All right, well, everybody, I want to thank you very much for joining us today. I want to remind you to go to tradersexclusive.com to check out our news, education, and trade ideas. We've got twitter.com, we're options_info, and we are going to post this up on tradersexclusive.com /archived_webinars. You'll get an email about it. Everybody will be talking to you, so keep an eye out for the follow-ups. And thank you again for being with us. And just saying to everyone, well, have a good day, and thank you for joining us. That's all I can do. Happy trading. Trade well.
Thanks a lot. See you, everybody.
Bye-bye.